slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030. 11
of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technology.
Okay, guys, as you can see, we need to place stop on profit for euro. We need to move even to better position. So I'm going to move stop on profit to 117.30, 38.5. 38.1, sorry. Yeah, okay. Stop on profit. Move to 117, 38.1. Okay, we have 5 pips in profit and it's still going up. I'll speak to you later, guys.
Spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, eConcrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing eConcrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
eConcrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. eConcrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, eConcrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
There is no time to waste. The Delta variant is dangerous and spreading, causing a pandemic of the unvaccinated. That's the pandemic, the unvaccinated. And while we're starting to see initial signs that cases may be declining in a few places, nationwide cases are still rising, especially among the unvaccinated. Across the country, virtually all the COVID-19 hospitalizations and deaths continue to be among the unvaccinated. That's worse in states where vaccination rates are overall low. But even in states where many people are vaccinated, the unvaccinated are still at risk. Let me be clear. There are cases where vaccinated people do get COVID-19, but they are far less common than unvaccinated people getting COVID-19. And most importantly, their conditions are far less severe. The overwhelming majority of people in the hospital of COVID-19, or almost all those dying from COVID-19, are not vaccinated. Not vaccinated. If you're fully vaccinated, both shots plus 2 weeks, your risk of severe illness from COVID-19 is very, very, very low. Now, I know that parents are concerned about COVID-19 cases among their children. I'll be addressing this soon with Secretary Cardona to discuss how we get our kids back to school safely. Cases among children are still rare, and severe cases among children are very, very rare. But I know that parents are thinking about their own kids. It's not as reassuring as anyone would like it to be. So let me say this as parents, to the parents. As you have the tools. You have the tools to keep your child safer, and two of those tools, above all, are available to you. One, make sure that everyone around your child who can be vaccinated is vaccinated. Parents, adults, teens. Two, make sure your child is masked when they leave home. That's how we can best keep our kids safe. As I've said before, the pandemic of the unvaccinated is a tragedy that is preventable. People are dying and will die who don't have to. So please, please, if you haven't gotten your vaccination, if you haven't gotten vaccinated, do it now. It could save your life and the lives of those you love. Now, the good news is that people are getting vaccinated. For the past several weeks, my administration has imposed new vaccine requirements on federal workers, the armed forces, people who work in federal medical facilities, and nursing home workers. Governors, mayors, and private sector leaders have done the same. We've also encouraged new incentives. For example, in some states, you get $100 if you get vaccinated. These new requirements and incentives are accelerating vaccinations once again, giving us the hope that we can put this Delta variant behind us in the weeks ahead. There are three facts everyone should know about where we are in this fight against this pandemic. First, even as the Delta variant has ravaged the unvaccinated, the deaths have climbed. The death rate is still 70% lower than it was last winter. Why? Because we did such a good job vaccinating those most at risk, senior citizens. America has about 54 million senior citizens. About 50 million have gotten at least one shot. That's almost 92%. Secondly, overall weekly new vaccinations are up more than 56% from where they were a month ago. Last week, we saw a record of vaccinations, more than 1 million shots a day for three straight days. This is the first time this has happened since June. 6 million shots in the last 7 days, the highest 7-day total in over a month and a half. Remember when we were trying to get 70% of the people over 18 at least one shot? Well, we've not only gotten that done, we've gotten 71% of everyone aged 12 and older their first shot. That's over 200 million Americans. And over 170 million are now fully vaccinated. Third, states that have been lagging are seeing their vaccination rates grow faster. In fact, in Alabama, Arkansas, Louisiana, and Mississippi, more people got new vaccinations in the past month than in the prior 2 months combined. The progress we're making on vaccinations now is going to produce results in the weeks ahead. The sooner you get fully vaccinated, the sooner you'll be protected. According to the experts from the Yale School of Public Health, the pace of our vaccination effort has saved over 100,000 lives and have prevented more than 450,000 hospitalizations. This is critical progress, where we need to move faster. As I mentioned before, I've imposed vaccination requirements that will reach millions of Americans. Today, I'm calling on more companies, I should say, in the private sector to step up with vaccine requirements that'll reach millions more people. If you're a business leader, a nonprofit leader, a state or local leader who has been waiting for full FDA approval to require vaccinations, I call on you now to do that. Require it. Do what I did last month. Require your employees to get vaccinated or face strict requirements. And as I said last week, vaccination requirements have been around for decades. Students, healthcare professionals, our troops are typically required to receive vaccination to prevent everything from polio to smallpox, measles, mumps, rubella. In fact, the reason most people in America don't worry about polio, smallpox, measles, mumps, and rubella today is because of vaccines. It only makes sense to require a vaccine to stop the spread of COVID-19. With today's FDA full approval, there's another good reason to get vaccinated. So, please get vaccinated now. If you go to vaccines.com, or text your zip code to 438829, 438829. You can find a number of vaccine sites near you, just minutes away, where you can get your shot without an appointment. All around the world, people want these vaccines. Here in America, they're free, convenient, and waiting for you. So please go today for yourself, for your loved ones, for your neighbors, for your country. I'll close with this. We're in the midst of a wartime effort to beat this pandemic. It's one of the biggest and most complicated challenges in our history. And it's based on an unparalleled vaccination program that is saving lives and beating this virus. It's a vaccination program that's getting us back to our loved ones and a way of life we were used to. It's happening, and it's going to keep happening. If you help, it helps our economy. It gets everything moving. It keeps us growing. Together, we've made significant progress in just 7 months. We just have to finish the job with science, facts, and confidence. Together as the United States of America. So please get vaccinated today. God bless you all, and may God protect our troops. Thank you.
Well, there you have President Biden live from the White House speaking on the COVID vaccination program. The president saying that this is a pandemic of the unvaccinated. And also, of course, with the news that U.S. regulators have approved the Pfizer and BioNTech vaccine, given it full FDA approval. The president saying that those who've been waiting for full approval should go and get their shots now, Katie.
Yeah, and it's interesting to hear him say encouraging employers to require their employees to get vaccinated. It'll be interesting to see if we see more companies mandate that now that we do have that full FDA approval.
Yeah, already today, New York City, New Jersey have mandated that teachers get shots. We also saw Dow Jones report early this morning that Chevron is making some employees go and get vaccinated. And I think that's part of today's equity story and why we're seeing equities rise higher on the day, considering that the vaccine approval could actually prompt those who have been wary of getting the vaccine to go out and get it. Well, speaking of the equity market, let's get a check on the trading day with Doug Prisner. Hey, Doug.
Hey, Tim. I think you hit the nail right on the head. Equities are definitely getting a boost from news of the FDA giving formal approval to Pfizer's vaccine. Right now, the stock is the most heavily traded issue in the U.S. Shares are up about 2.7%. So this may change the narrative on vaccinations and boost immunization efforts. You know that Delta variant has been surging, and Now it appears as though it's going to really have a negative impact on momentum for the global recovery. Also today, speculation that Moderna's vaccine may be next in line to receive official formal approval from the FDA. Moderna shares right now higher by about, let's call it 5.5%. Right now in the equity price action, Dow Industrial Average up 0.8%, S&P 500 better by more than 1%, and the NASDAQ Composite is higher by about 1.6%. Intel has won an award from the U.S. Defense Department for domestic chip making. The company will provide commercial foundry services. This is part of a broader government program to build up domestic chip design and chip production with the latest in cutting-edge technology. Intel right now is up about 2.7%. And that is helping to send the Philadelphia Semiconductor Index to a gain of about 2.5% today. Keep your eye on crude oil. We've got a rally in New York with WTI up more than 5.8%, 65.80, and that is giving a lot of strength to energy-related stocks. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Let's get to the Market Drivers Report. With us now in the Bloomberg Interactive Broker Studio, stocks editor at Bloomberg News, Dave Wilson. Also joining us is Markets Live reporter Kriti Gupta with Bloomberg News. She's on the phone from our New York City bureau. Dave Wilson, a relatively broad-based rally that we're seeing today. Only 3 of the 11 sectors lower: consumer staples, real estate, and utilities. Take us through today's trade.
Well, you know what jumps out? Just how lopsided the gains are. You wouldn't necessarily know it by looking at an S&P 500 that's up 1%. Seems kind of, unspectacular, you might say. But then you look at the stocks in the index, and I go through them at the moment and see that we have 68 stocks in the S&P 500 that are up more than 2.5%. You want to know how many are down more than 2.5%?
How many?
0.
Well,
None of them.
I've had a hard time finding decliners.
Absolutely. Hey, you go through the Russell 3000 index, and even broader gauge of U.S. companies includes the Russell 2000, which we talk about on a regular basis for smaller companies. You can't find a stock in that index that's down 5%. I mean, it just goes to show you that, you're seeing quite the broad-based advance, and a lot of it presumably tied into the approval of the Pfizer or BioNTech vaccine in one way or another, if only in the sense that, it's another step toward dealing with the Delta variant, which has been such a concern, in terms of whether companies would be able to build on the kind of earnings growth that they showed with all those second quarter reports.
And so, Kriti, like Dave said, we are seeing a broad-based equity rally. Definitely looks a risk on if you look under the hood at the sectors. But let's talk about the bond market, because if I look at 10-year Treasury yields right now, they're just about flat, which is not what I would have expected when you see energy leading the pack. So what's going on there? Is it safe to call this a risk-on day if we don't see bonds responding?
No, I don't think you can call it a risk-on day because, it looks like a pretty defensive trade, to be completely honest. Sure, you have these broad gains. But look, the NASDAQ is leading, and you have the Russell 2000, like Dave mentioned, up as well. So when you see tech higher and small caps higher in the stock market, to me, that just seems like more of a momentum trade. More than anything else, it's not going to be a cross-asset move. You're not going to see it in bonds or commodities for that matter. This is all going to be in anticipation of Jackson Hole. We can say that word about 1,000 times, just waiting to see if Chairman Powell is going to change his tune. But remember, there's a few other things at play here. You have this broad rally. You do have the FDA approval. But the reason it's so helpful for stocks right now is because with the full vaccine approval, you do have the ability to legally mandate or legally enforce, those vaccine mandates, which a lot of offices are talking about bringing back. So there is a legal component to it. And on top of that, you have this kind of potential delaying of tapering, which is also helping the stock market, kind of in a continuation of what you saw on Friday. But you said it, Katie, bond yields are flat today. And I think that's, once again, also a continuation of last week where you didn't actually see them move that much, even though taper talk kind of dominated the conversation.
Dave, do we start to see more and more of that, of companies coming out and saying, in order for you to actually work here, you have to get vaccinated?
Well, that's the potential. You would think about it in terms of, ratcheting up the standards, so to speak. Whether you talk about vaccination or you talk about mandatory testing, if you're not vaccinated, whatever approach you take, I mean, it comes down to just sort of dealing with the issue. And of course, there's a bigger question overriding all of this, right? Can companies actually get workers back to the office?
Yeah.
Which is really the front and center concern sort of tied into the virus. And how does that affect their ability to attract and retain staff? I mean, people have gotten used to the idea that they can work from home. And, can you put that genie back in the bottle, or do you just have to figure out, how to make another wish?
Hey, Dave, speaking of that, Pfizer and BioNTech both higher today. ADRs of BioNTech up more than 8.8%. Pfizer higher by more than 2.7%. Katie and I were talking about this on Quick Take Stock earlier today. Wasn't this priced in? I mean, investors knew that the United States and the FDA were going to grant full approval. Why the pop today?
Well, maybe they weren't quite so sure about the timing, but they're also, thinking about next steps. I mean, there's been a lot of talk lately about booster shots, how they're in the hopper, so to speak. What does this mean in terms of their ability to sell internationally, Pfizer and BioNTech? Do other jurisdictions sort of follow that lead? I mean, there are lots of ways you can kind of, interpret what's going on. I mean, sure, people might well have figured that this was going to come sooner or later. The question is always sooner rather than later, or, is it just a matter of confidence now, as we move forward?
Hey, Creedy, very briefly, last word here as we do look forward to Jackson Hole. What do you have on your mind? What should we be watching today?
I'm going to steal from Michael McKee, actually, because I think when we're talking about Jackson Hole, we have to talk about the labor market recovery. Let's look past Jackson Hole, and you have to focus on not just those payrolls numbers, not just jobless claims. You have to talk about labor participation.
Okay.
That's going to be the takeaway.
All right, Creedy Gupta, Markets Live reporter for Bloomberg News, joining us on the phone from our New York City bureau. Also with us, Dave Wilson, stocks editor at Bloomberg News in the Bloomberg Interactive Broker Studio. Dave Wilson's going to be back in just about 90 minutes or so, roughly, maybe an hour and 15 minutes, Dave, to give us the stock of the day, the song of the day, and of course the chart of the day. It's time now, though, for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number, Katie, $834 million. Imagine spending $834 million an hour for 18 months. That's how much central banks have spent buying bonds since the pandemic hit. That's according to Bank of America strategists who estimate that the Fed alone has put in $4 trillion. This is a statistic that speaks to the unprecedented wall of money that kept companies afloat during lockdowns and sparked the biggest stock market rally of a generation. And this is why investors are so closely looking at any sort of words from Fed Chair Jay Powell or anyone on the Fed right now as to the pace of bond buying and to what happens when it comes to tapering.
Exactly, and we're probably going to get more words later this week at Jackson Hole. Going to be interesting to see whether these Delta variant fears that led them to move their symposium virtually actually affects the pace of that taper that we're all so closely watching.
Yeah, and we're going to continue talking more about tapering throughout the show. In the meantime, let's get to Dr. Seth Lederman, the CEO and the co-founder of Tonix Pharmaceuticals, also the chairman. He joins us once again on the phone from Massachusetts. Dr. Lederman, it is great to have you back with us. How are you?
Great to be with you again. Well, it's a great day to be speaking to you about COVID vaccines.
Yeah, a lot of news when it comes to COVID vaccines. We just heard from President Biden encouraging everybody who has not yet gotten a vaccine to go out there and get it. Do you agree with the president that this continues to be a pandemic of the unvaccinated?
Absolutely. President Biden is a tough act to follow. I thought he had a clear message, and I agree with him that by and large, particularly fueled by the Delta variant, this is a epidemic or pandemic of the unvaccinated in the United States right now.
And so, Dr. Lederman, we heard from President Biden that FDA approval, it's the gold standard. But I'm curious to hear your take that, now that we do have full authorization, it's finally here. Do you think this will actually lead to meaningfully more vaccinations?
Well, I hope so. First of all, I think it's a sign of a great achievement for Pfizer and their partner BioNTech to get their vaccine to this point. And I think many people believe that Moderna is not far behind. We're in an unusual situation where the Surgeon General is kind of tipping his cards on some of these approvals coming up. So I think that the mRNA technology that they developed and rapidly deployed has just shown great promise, and it's a very exciting time. But on the other hand, there is also an announcement by the CDC, FDA, and a bunch of other groups, the White House COVID Task Force, et cetera, that booster shots are going to be recommended and that they're going to be starting on September 20th. So at the same time where this is a great advance and a recognition of what's happened so far, I think there's also been a concession that these vaccines are providing only temporary protection, not durable protection.
Well, talk to us about where you are with the type of protection that you're developing right now at Tonix Pharmaceuticals. What is the vaccine against COVID that you're working on, and what's the latest on the timeline for when it could actually be something that's used on us?
Thank you. We're developing a live virus vaccine, and it's based on a novel platform that we developed. But live virus vaccines are the oldest type of vaccine technology. And even in Operation Warp Speed, there were 4 pillars of Operation Warp Speed where, one of them was the highly successful RNA vaccines, but the fourth that they never really got to was live virus vaccines. Merck was developing 2 of them, but then in January of this year, abandoned those programs. So we're developing a live virus vaccine against COVID-19 because traditionally, live virus vaccines have provided durable immunity, meaning years, decades, even lifelong. And when President Biden mentioned some of the great successes in the history of vaccination, he specifically mentioned smallpox, measles, mumps, rubella, and polio. Those are live virus vaccines. So we don't know all of the reasons why live virus vaccines provide such durable immunity, but many people believe it's because they stimulate T-cell immunity and a particular type of T-cell immunity that has this long durability.
So hypothetically speaking, with a live virus vaccine, would a booster shot be needed for that type of vaccine versus, an mRNA-based vaccine?
Well, we won't know for COVID until we get into human trials, but for smallpox, there was no booster required, and measles, mumps, rubella typically is lifelong. So they do last a very long time, but again, it's something that we'll need to figure out.
When is the timeline for human trials?
Thanks. We expect to be in human trials in the first half of next year. The thing that's holding us back is that it's more difficult to make the high quality of live virus vaccine necessary to do human trials. And that's really the advantage of the mRNA vaccines. Since they are completely synthetic, you can rapidly manufacture them. And again, hats off to Pfizer and BioNTech for what they've done. They've really delivered a solid blow to give us some breathing room with this pandemic, for the vaccinated anyway. But live virus vaccines are harder to develop, but when they're developed, they can be easier to manufacture, easier to store, easier to transport, and typically are one-shot vaccines.
And so, Dr. Letterman, I want to go back to the topic of boosters. And in the notes you sent over, you made the point that, we would be better protected by vaccinating the unvaccinated here in the U.S. and around the world. But I got to ask, what about for those who don't want to get vaccinated? If you assume that there's, a certain percentage of the population that will never willingly take the vaccine, in that situation, what do we do?
Well, it's an excellent question, and it seems to be a hodgepodge of reasons why people are reluctant. Hopefully, as the president said, hopefully the FDA approval will allay some of their concerns. I know at least some of them feel like they don't want to be, the subject of tests or something. I think at this point, as the president said, 200 million Americans have been vaccinated, so I think we're beyond the test stage. But I think that brings up another potential weakness of the mRNA vaccines, that we really don't know whether they block forward transmission. Forward transmission means that if someone is infected, are they able to transmit it to someone else? And for the big vaccine successes that we've had in history, smallpox, for example, it really does block forward transmission. And that was one of the reasons why this concept of herd immunity was so important. But we really don't know for the Delta variant whether vaccinated people will be less infectious.
Yeah, that's certainly what remains to be seen. That's Dr. Seth Lederman, the co-founder, chief executive officer, and chairman of Tonix Pharmaceuticals, joining us once again from Massachusetts. Well, we got much more Bloomberg coming up in just a few minutes. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stennebeck live in the Bloomberg Interactive Brokers Studio. Carol Masser is off today, and Katie Greifeld, Bloomberg News cross-asset reporter, also my co-anchor on Bloomberg Quick Take Stock, airing each day at noon, joins me now. Katie, it's great to have you on the show today. The top of the show, we got Biden, as they say, the Biden administration and President Biden giving a press conference on the vaccine, so we didn't get to do the full intro, but it was great to have you on the show today.
It's great to be here. Thank you for the introduction, and we're spending a lot of time together today.
We are spending a lot of time together. We're also lucky to be spending time with Doug Krisner, who's giving us an update on the business day when it comes to trading and business news. Hey there, Doug.
Hey, Tim. S&P 500 right now is at a record high. The equity market generally has been given a boost by news of the FDA giving formal approval to Pfizer's vaccine. Pfizer shares right now up more than 2.7%. We've got more than 50 million shares trading. It is by far the most active stock. And now speculation of an imminent approval for Moderna's mRNA vaccine, and Moderna shares right now up by more than 6.5%. You see the change in narrative on the vaccination process may really deal with this concern in markets about how the Delta variant has been slowing the momentum of the global recovery. Dow Industrial Average right now is better by about 0.8%. Energy stocks leading the S&P 500 higher by 1%. The NASDAQ composite is up by more than 1.6%. The day's economic news was somewhat mixed. Home sales, on one hand, posted a larger than expected increase in the month of July, but the growth in both U.S. services and factories slowed a bit. We're now roughly at an 8-month low, and this as markets look ahead to the Jackson Hole Symposium. It will kick off on Thursday. It will happen virtually again this year. Fed Chair Jay Powell is set to speak on Friday, and he may give us a little bit of insight into how and when the Fed plans to taper those bond purchases. You might remember last week, Dallas Fed Bank President Rob Kaplan was saying he is open to adjusting his view on starting the tapering process sooner rather than later. That's if the Delta variant persists and does, in turn, hurt economic progress. 10-year Treasury, right now with a yield of 1.25%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Well, pregnant women with COVID-19, they are 15 times more likely to die, 14 times more likely to need to be intubated, and 22 times more likely to have preterm birth than those who are uninfected. That's according to a study published this month by JAMA Network Open. Joining us now is Shira Stein, healthcare reporter at Bloomberg Law. She joins us on the phone from Washington, D.C. Shira, it's great to have you with us. The part that I didn't get to in your story is the fact that fewer than 3/4 of pregnant people are vaccinated. Fewer than 1/4, I should say. 76.2% of pregnant people are unvaccinated. Why is that so low?
Yeah, it's a pretty shocking statistic. I think it's really because of the fact that none of the vaccine clinical trials of the 3 vaccines in the U.S. that are authorized and approved, none of them included pregnant people in their trials. That's pretty common in clinical trials, not to say that it's a good thing, but it's pretty common. And so pregnant people didn't have any data to rely on around safety or efficacy until after the vaccines were publicly available, and when people who decided that it was, worth it for them to try it and see how it went, until we got more data. And so for months, we didn't have data on how any of these vaccines worked in pregnant people.
And so where do we stand now? Because sure, pregnant people were excluded from the vaccine trials. Sounds like that's pretty common, but do we actually have data now that, the vaccines have been available widely for months now? Have they actually run trials that include pregnant people?
So it's not trials so much as it is like data from what we've seen in the real world. But yes, absolutely. Vaccines are safe and effective for pregnant people. They do not cause miscarriages as there is, or fertility issues as there is the misinformation about that around. And as we saw in this, as I reported, if you get COVID and you are pregnant, you are in a really, really bad spot if you are unvaccinated.
Talk a little bit about that.
Yeah, so what I found speaking to doctors across the country in places like Texas and Florida, but also places like Los Angeles and Seattle, Washington, was that they are seeing, with this latest surge in cases from Delta, a new trend of pregnant people who are getting really sick, who are needing to be intubated and put on a ventilator, who are having to deliver their babies early, and some who are dying, and some who are having to spend months in the hospital. I mean, it's just really awful. These are largely unvaccinated pregnant individuals, and they're largely young and healthy, age like 18 to 30. So it's pretty shocking to hear this. You know, we've been hearing a lot about kids and COVID in hospitals right now, but this is another problem, is pregnant people and getting COVID.
So, I mean, those are terrifying stories. And I'm curious, I mean, is that because pregnant people are more at risk than a normal unvaccinated person, or is there any reason to believe that you're more at risk to become more seriously ill if you are also pregnant?
Yeah, so being pregnant tends to suppress one's immune system, so that could be part of it. The doctors that I spoke to think that it's not so much a fact that you are more likely to get COVID if you're pregnant, more so that it's a compounding of factors. You know, your immune system's not as good, you're around a number of people having to go to the doctor. You know, there's a number of factors that could lead to it. And if you do get COVID, then you're more likely to have severe illness.
Based on your reporting, I know you spoke to a lot of people who were vaccinated and weren't vaccinated. What did they give you for the reasons that they ultimately did decide to get vaccinated, who are pregnant, and those holdouts who decided not to?
Yeah, I mean, I actually had a really hard time talking to some of the people who have remained unvaccinated. But what I can say is people are just really nervous because of the lack of information that there was. The CDC did not recommend that pregnant people get the vaccine until a few weeks ago. Two of the major medical societies for pregnant individuals, the American College of Obstetricians and Gynecologists and the Society for Maternal and Fetal Medicine, they recommended it about a month ago. So this is just a really recent thing. Some doctors still aren't sure about recommending it to their patients. You know, I've seen stories about people saying, well, I talked to one doctor and my doctor said it was good for me to get, but my sister's doctor said she shouldn't. And so I think there's just a lot of confusion out there. I don't think it's, you know, people being quote unquote anti-vaxxers so much as it is that they are just genuinely nervous because of the lack of information, because their doctors aren't sure what to tell them.
Yeah, and I think the confusion will continue to persist when it comes to boosters and to what extent, like, you know, if somebody got a shot before they got pregnant, you got fully vaccinated, do they get a booster, right? That's the question, and I think a question that many people will have moving forward. It is a fantastic piece. It's the reason that it's among the most read in the Bloomberg terminal right now. It's called Pregnant, Unvaccinated, and Intubated, Doctors Alarmed by Rise. That's Shira Stein, healthcare reporter for Bloomberg Law, joining us on the phone from Washington, D.C. Katie, I think the question remains is that, you know, the science continues to change, so the CDC coming out and actually saying that this is helpful, that women need to do this, then that's a very important move there. Let's get the latest on world and national news with Nancy Lyons in D.C. Hey there, Nance.
Hey, Tim. The Pfizer-BioNTech COVID-19 vaccine has received full approval from the FDA. President Biden says it's time for those who've been hesitant to now roll up their sleeves.
The moment you've been waiting for is here. It's time for you to go get your vaccination and get it today.
Biden says the shot is not only safe, but widely available for free at thousands of locations all across the country. Search crews are working through shattered homes and tangled debris in Tennessee, looking for dozens of people still missing after record-breaking rain unleashed floods that killed at least 22 people. Maggie Moran lives in hard-hit Waverly, Tennessee, and says it's hard to have hope.
There's so many people out looking, and then you find someone, like, just on the side that they have already looked, and you just keep finding more people just laying there.
Moran says it is a devastating situation. Saturday's flooding took out roads, cell phone towers, and telephone lines, making it even harder for residents to know who has survived. This is the last day in office for New York Governor Andrew Cuomo. Lieutenant Governor Kathy Hochul takes over at midnight, becoming the state's first female governor. Cuomo maintained his innocence during his farewell speech today and said it was politics that drove the probe.
When government politicizes allegations and the headlines condemn without facts, you undermine the justice system. And that doesn't serve women, and it doesn't serve men or society.
Cuomo announced 2 weeks ago he would step down rather than face a likely impeachment battle over sexual harassment allegations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenevec live in the Bloomberg Interactive Brokers studio, joined by Katie Greifeld, my co-host on Bloomberg Quick Take Stock. Also, my co-anchor throughout the day today on Bloomberg Business Week Radio. Katie, another day, another SPAC.
I know, it's amazing. This time from Richard Branson. This is Virgin Orbit has agreed to go public through a SPAC with Next Gen Acquisition Corp. And its investors will include Boeing, AE Industrial Partners, and I don't know, I thought SPACs were cooling off, but this one is valued at about $3.2 billion, Tim.
Well, we have to remember, too, that Virgin Galactic, ticker SPCE, did go public through a SPAC. It was among the first very high-profile SPACs, and that was quite a while ago, almost 2 years ago, before the major SPAC boom that we've seen of the last 18 months. This agreement, though, for Virgin Orbital extends this wave of mergers with SPACs. These are, of course, blank check companies. They've raised, Katie, $129 billion globally this year. That's more than last year's record of $84 billion. And the deals are playing an increasingly important role in funding new space ventures. A SPAC transaction involving another launch company, Rocket Lab USA, that is set to close later this week.
Yeah, it's amazing. And I will say, even though, this is a different part of the Virgin universe, you are seeing Virgin Galactic shares rise today, up about 4% on that news. So it's interesting to see it ripple through Richard Branson's universe.
Yeah, the SPAC transactions have become increasingly difficult to complete, though. This as investors have grown selective about the private investments in public equity that are typically part of the deals. We had a story in Bloomberg Business Week last week about increasingly investors taking a short position in some SPACs because the 18 to 24 month time frame that SPACs have in order to find one of these companies to target with the funds that they've raised. So as we do get closer and closer to 18 to 24 months out from some of these deals, I wonder if we're going to start seeing that sort of short interest increase. We're also keeping an eye on companies like SpaceX. They are remaking satellite launch technology. That one is still private, valued at tens of billions of dollars. This is Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have just under an hour and 13 minutes until the closing bell. The S&P 500 is at record levels right now. Generally speaking, the equity market is getting a big boost from news that Pfizer's vaccine has been given formal approval from the FDA, and now a lot of speculation on an imminent approval for Moderna's messenger RNA vaccine as well. Pfizer, most heavily traded by a mile, stocks up more than 2.5%, and Moderna shares right now better by nearly 6.9%. By the way, Chevron is requiring employees who work on its oil platforms in the Gulf of Mexico to get vaccinated, given the surging caseload that we have seen across the southern U.S. Rival Hess Corporation has adopted the same policy. Semiconductors rallying today. Intel has won an award from the U.S. Department of Justice for domestic chip making. Intel shares up by more than 2.7%. And Nvidia stock is up by more than 5%. We're trading at record levels right now. A post-earnings rally extending into a third straight session. GM is recalling its Bolt electric vehicles due to safety concerns about the battery. It's made by South Korea's LG Electronics. And analysts over at RBC were saying this shows the reliance on suppliers increases the risk of a manufacturing defect. GM shares down about 1.2%. The Dow is up 0.8%. S&P 500 higher by more than 1%. NASDAQ comp up more than 1.6%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Well, the bidding war over a maker of airplane wheels and fire detection systems may herald a fresh wave of consolidation in the aerospace sector. So writes Brooke Sutherland, deals and industrials columnist for Bloomberg Opinion. Brooke's story will be featured in the upcoming issue of Bloomberg Businessweek magazine. You can read it now on the Bloomberg and at Bloomberg.com/Businessweek. Also joining us is Joel Weber, editor at Bloomberg Businessweek. He's on the remote from Massachusetts. So Joel, the big question is bigger is better back when it comes to aerospace and aviation?
Well, I've got to be honest, this isn't a space that I watch that closely.
Pun intended?
And, I'm glad you picked up on it. But that was what kind of jumped out at me from Brooke's story, is like, this isn't a place that we have seen a whole lot of action. And then all of a sudden we have, and it's not everyday companies, right, Brooke? What kind of players are we talking about here?
Sure. So Meggitt makes, they're well known for their wheels, brakes, fire detection systems, things like that. This is sort of a perennial takeover target. It often comes up in M&A speculation, but we've never really seen any deal get this far. And now it has not one, but two suitors. The first is Parker Hannifin, which has been aggressively expanding its aerospace business over the past couple of years, trying to get out of some of its more traditional heavy-duty industrial markets that tend to be a little bit more economically volatile. And the other is TransDigm, which is also an aerospace supplier and has a reputation for being particularly aggressive on pricing when it comes to the parts that it sells and parts and services to airplane makers. And so it's going to be a really interesting bidding war to watch how it plays out. But you're right. I mean, just the fact that we have a bidding war at all is notable for a sector that's been particularly beaten down by COVID.
Yeah, Brooke, I want to talk about that, the timing of this bidding war, because it feels like the industry at large is in a really weird place as we try to emerge from this pandemic.
It is, and it's certainly jarring to look at it right now when you have the headlines of the airlines warning about, not quite seeing the demand they were hoping to see in August, the people canceling bookings or, maybe just not making bookings at all. But at the same time, those in the aerospace sector that weren't in the same position as Boeing, which, was dealing with the 737 MAX crisis, actually their balance sheets look pretty good. They were able to tap the debt markets when they needed it, but, they're really coming out of this in a pretty strong position financially, and I think they're preparing for the next leg. And, one of the things that's been really interesting is, as bad as this downturn has been for the aerospace sector, we're already starting to talk about getting back to a moment in time where we're not worried about not having enough passengers, but worried about having enough planes. And that's really where the industry was before the pandemic hit. I mean, there was a mad rush by all of the airlines to try to get planes, try to get the capacity so that they could fly passengers where they wanted to go. And, against that backdrop, it does make sense to consolidate. You have, a number of sort of mid-sized players, but you also have a lot of very large players that have been doing a lot of deals, perhaps the most notable being Raytheon, which acquired Rockwell Collins, also merged with Raytheon, the defense contractor. And so as you have other suppliers getting bigger, obviously it's a duopoly as well with Boeing and Airbus, it makes sense to try to be as big as you possibly can be yourself.
Hey, Brooke, when it comes to this industry, the thing is these companies, the airplane, the airlines have to make these orders years and years in advance of when they expect to actually need that capacity. They actually expect to have delivery of those aircraft. What are we hearing from from Airbus and from Boeing right now about the way that airlines are canceling or actually ordering new planes, and when are those going to be delivered, and are they all A320s and 737 Maxes? What about alternative fuels? Take us into it.
Yeah, no, so we're starting to see, more actual orders than cancellations, which is a nice positive trend, particularly for Boeing. They've really seen a ton of order activities from the U.S. airlines. That's really been the driver of their purchases to date. There was a massive order from United Airlines for Boeing jets. Southwest also topped up its 737 MAX order. And then Airbus has not seen as many cancellations as Boeing because they were in the beneficial position of not having one of their planes grounded for nearly 2 years, which meant that the airlines had less flexibility to cancel their orders. And so they're being a lot more aggressive at looking at their production schedule, and they think they can get back above their pre-COVID pace by 2023. So that gets to that point, I was talking about where we're moving toward a future where the airlines are going to be wanting these airplanes that maybe they thought they didn't need a couple months ago, but they will soon find themselves in the position where they do. And the plane makers and their suppliers are really going to have to ramp up capacity relatively quickly to meet that need. And then as you play that out further down the road, everybody is very concerned about the carbon footprint of all aspects of the economy, but particularly air travel. And there's a lot of discussion about using sustainable aviation fuels or even moving into sort of next generation engine technology. I don't know if we're there yet in terms of, hydrogen or batteries or anything like that for large airplanes, but certainly they want to make as many changes as they can that are realistic right now. And you need money to do that. You need a bigger balance sheet. You need research and development dollars. And so that's another key driver for this consolidation theme.
So what's standing between this Meggitt deal and a finish line, Brooke? Because it's not clear if it's actually going to be a slam dunk or not.
Right. I mean, and it's not price because both the buyers are offering very attractive valuations. They're above Meggitt's pre-pandemic high. We're talking about, pretty meaty valuations here. So price is not going to be the issue, but it's going to be more down to the UK government, which has been particularly prickly lately about takeovers, especially when they involve key domestic assets that have a link to national security. So Meggitt is also a defense supplier. And this is happening in concert with another takeover of a UK defense supplier, Ultra Electronics. And so it's a difficult backdrop right now to try to do a aerospace and defense takeover in the UK. And so Parker Hannifin has made some pretty strong commitments to the UK government in terms of keeping the headquarters, keeping headcount in engineering and manufacturing flat. They pledged to ramp up R&D spending pretty significantly over the next 5 years, which, those are meaningful commitments. And we haven't heard yet from TransDigm if it's willing to match that or perhaps go a little bit further. But I think that is the biggest issue in this deal and probably what will determine who ultimately wins this bidding war.
Well, there you have it. Brooke Sutherland, Deals and Industrials columnist for Bloomberg Opinion, joining us on the phone from New York City. Also with us, Joel Weber, editor at Bloomberg Business Week on the remote from Massachusetts. You can read Brooke's story. It's featured in the upcoming issue of Bloomberg Business Week magazine. You can read it at Bloomberg.com and, of course, at the Bloomberg Terminal. Also, go to Bloomberg.com/businessweek. For those of you listening in New York, Washington, D.C., and San Francisco, or watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is up next.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters in New York, I'm Doug Krisner. 3 p.m. on Wall Street. We have an hour remaining, and right now the S&P 500 holding at a record high. The equity market generally has been given a big boost by news of the FDA's formal approval for Pfizer's vaccine, and now a lot of speculation of imminent approval for the vaccine from Moderna. Pfizer shares right now most heavily traded. The stock is up by more than 2.7%, and we have Moderna shares higher by more than 7% at this hour. Dow Industrial Average ahead 0.8%. The S&P is up by more than 1%, and in the NASDAQ market, the composite index is higher by about 1.7%. Intel has won an award from the U.S. Defense Department for domestic chip making. The company will provide commercial foundry services. This is part of a broader government program to build up domestic chip making and design. Shares in Intel right now ahead by more than 2.5%. We want to mention Nvidia shares. They are on a rally right now, a third straight day after that earnings topped expectations. Nvidia shares right now up nearly 5.5%, and the Philadelphia Semiconductor Index right now is up by more than 2%. General Motors is recalling its Bolt electric vehicles. This is due to safety concerns about the vehicle's battery. The battery is made by South Korea's LG Electronics. Now, analysts over at RBC were saying this shows the reliance on suppliers is basically inviting a little bit of risk for a manufacturing defect. Now, LG Electronics wants a full investigation. Both companies will actually be examining the source of the problem with the batteries in the Bolt electric vehicle. GM shares right now weaker by more than 1%. In the bond market, 10-year Treasury right now with a yield of 1.25%. We've got a rally in crude oil. WTI up by more than 5% right now in New York, trading around 65.60. I'm Doug Krisner, and that is your Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week on this Monday, August 23rd, 2021. I'm Tim Stenovic, live from the Bloomberg Interactive Brokers studio. Carol is off today, and joining me now is Katie Greifeld, Bloomberg News cross-asset reporter. She's also my co-anchor on Bloomberg Quick Take. Stock airs each and every day at noon Eastern Time at Bloomberg.com/QuickTake. Katie, I want to talk about Bitcoin because we talk a lot about it on Quick Take Stock. Bitcoin is higher today by, well, close to a cool $1,000 higher, but near $50,000 it's where it's trading, and it actually surpassed that a little earlier in the day. How did it come so far, so fast from that low back in July of just under $30,000?
You know, it's a great question, and I wish I had a better answer, because if you look past the past few weeks when we did hit that low, it doesn't feel like we've gotten any meaningfully good news. If anything, we've gotten more bad news.
Yeah, China,
even the U.S., the regulators are circling in. We had that infrastructure bill pass in the Senate. But, I mean, if we think about how violent the plunge was, below 30,000, we saw a bunch of shorts liquidated, and basically position was a lot cleaner. I mean, I hate to say that because, you know, what does it even mean? But basically you had a bunch of people betting against Bitcoin. They were forced out, or betting for Bitcoin. They were forced out of those positions. And here we are, momentum begets momentum. And this market loves round numbers. The fact that we broke above $50,000, it'll be really telling to see where it goes from here.
Yeah, I think what's so interesting about this is there was no real catalyst, right? There was no big event. There was no Elon Musk equivalent coming out and saying, hey, we're this company and we're adding Bitcoin to our balance sheet, at least not at a scale that Tesla did back in February and March when it talked about Bitcoin.
Yeah, I will say it has been interesting in this most recent drawdown. I mean, that really just violent pullback from, mid-April down below $30,000 a coin. You didn't really see institutional interest dry up at all. You didn't see anyone pull back from the crypto space in a meaningful way. If anything, you saw more traditional Wall Street, more payment apps come into the space and make investments. So if I were going to make a bull case for Bitcoin, that would probably be it. Because if you rewind back to 2018, the last time we entered a crypto winter, whatever you want to call it, investment just dried up. There was nothing going on. Didn't see that this time around.
What about the bear case, if you could make one?
The bear case, if I would make one, I mean, it all centers on regulation. We've seen a lot of comments from the Treasury, from the Federal Reserve about stable coins, which they back pretty much every Bitcoin transaction. You put your money into stable coins first, and they're supposed to be backed 1-to-1 for dollars. We know that's not true, at least in the case of Tether, which is the largest stable coin. It holds a lot of commercial paper, which is close to cash, but it's not cash. There's still credit risk embedded in there. So we know that for sure. We've heard the Federal Reserve and others warn that this could have financial stability risks. I would expect to see a lot more scrutiny from those spheres. That's the bear case.
Can you talk a little more about institutional adoption? Because a listener is getting in touch with us right now saying that institutional adoption could be something that pushed it higher so quickly. You do a lot of reporting on potential Bitcoin ETFs, and also the fact that there are institutions that are hearing from their own clients, hey, we want in on this.
Yeah, I mean, that's the thing. No matter how much Jamie Dimon, for example, has railed against Bitcoin in the past, if JP Morgan clients want access to Bitcoin, the bank is going to find a way to provide it. So you've seen shops such as JP Morgan try to find ways to give their wealthier clients access to crypto. You should probably expect to see more of that. The Bitcoin ETF.
Yeah,
I mean,
when is this happening?
It's just like the white whale for the crypto market. Talking to Bitcoin advocates, to ETF advocates coming into this year was seen as a slam dunk, absolutely where we were going to get approval. Hasn't happened, and the new SEC chair, Gary Gensler, has been a lot more skeptical of the space than a lot of people expected. He's made comments that, the SEC, it doesn't have adequate oversight over, crypto exchanges. I'm paraphrasing there. All of that is standing in the way of a Bitcoin ETF.
What if investors, though, do want access to Bitcoin, they want exposure to Bitcoin without necessarily buying actual Bitcoin? There are still ways to do that, and ways to do that that traditionally trail the price and performance of Bitcoin.
Absolutely. I mean, you have the Grayscale Bitcoin Trust. That is not an ETF. It's a trust. It has some issues because you can't create and redeem shares, so it has traded as at a persistent discount to Bitcoin. You can also just find it on Coinbase, apps such as that. You can trade crypto on Robinhood. And it's interesting, back a few months ago, it was seen as a Bitcoin ETF would really be this amazing catalyst for the price of Bitcoin to send it higher if we did get approval. But I mean, crypto is so mainstream at this point. There's so many ways to get exposure to it. It's unclear if it would even be that catalyst anymore.
Do analysts and sources tell you that it's a matter of when, not if, there will be approval for a Bitcoin ETF? It's just a question of time?
Absolutely. I mean, and that's why you're seeing just a pile up of Bitcoin ETF applications. I think there's something of 15 applications filed in the past year alone, year to date, which tells you that issuers know it's a matter of time. There's obviously demand from the public. It's hard to make a case that there shouldn't be a Bitcoin ETF. Gary Gensler has, offered a bit of an olive branch, saying that maybe a Bitcoin ETF based on futures versus the physical coin would have an easier path to approval. So you have seen just an avalanche of filings based on futures rather than holding actual Bitcoin.
Well, Katie, just in the last 45 seconds that we have, the total crypto market value is up almost $1 trillion in the past month. What are the other cryptocurrencies you're paying attention to?
I can't believe we haven't talked about Ether.
I know.
Oh my gosh. Okay, Ether, it's the second biggest cryptocurrency, and it's often lost that it's really so much more than Bitcoin. It is up 350% year to date. Bitcoin is only up 70%. And it did have this big network upgrade. Some people have argued that's why it's been seeing such a big outperformance year to date. That's going to fade. But even if you look on a day like today, Ether, it's up 5%, and Bitcoin up somewhere in the avenue of 2%. So even still, Bitcoin or Ether is outperforming Bitcoin.
It's interesting because you see a company like PayPal shares higher by 1.5%. The company rolling out new services when it comes to cryptocurrency in the UK, services that are already familiar to American users of the platform. Katie Greifeld, Bloomberg News cross-asset reporter, Bloomberg Quick Take co-anchor. She's with me for the rest of the show in the Bloomberg Interactive Brokers studio. Let's get a check out the latest world and national news with Nancy Lyons in D.C. Hey there, Nance.
Hey, Tim. U.S. National Security Advisor Jake Sullivan says the evacuations continue in Afghanistan, with 16,000 people being airlifted in the past 24 hours alone.
They have now facilitated the evacuation of more than 37,000 people out of the country since August 14th. American citizens, third country nationals, our Afghan allies, and Afghans at risk of persecution or worse.
Sullivan says President Biden will participate in a virtual meeting of the G7 leaders tomorrow and will offer input on setting policies toward Afghanistan moving forward. President Biden is thrilled that the FDA has approved Pfizer's coronavirus vaccine. He called it a big moment in the nation's ongoing battle against the pandemic.
They've looked at the mountains of clinical data, clinical trial data, and the safety and efficiency data, and concluded without question the vaccine was safe and effective.
He says he wants everyone to go out and get that shot. President Biden's economic agenda faces a crucial test this week in the House and will be dependent on unity among Democrats.
While the plan has momentum in the Senate, the House votes have House Speaker Nancy Pelosi fighting to keep the tensions between moderates and progressives within the Democratic Party from derailing the whole strategy. Pelosi, Senate Majority Leader Chuck Schumer, and President Biden had crafted the plan to move the two-part project through Congress. The House is set to take a procedural vote today, and then Pelosi wants to have the House adopt the budget resolution today, then pass the voting rights legislation tomorrow. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec in the Bloomberg Interactive Brokers studio, along with Katie Greifeld. This is Bloomberg Business Week and Bloomberg Radio. Katie, Treasury bears have been redeemed as Citi, Michael Burry see higher yields. Investors betting on higher Treasury yields, they are getting affirmation from the likes of Citigroup. Also, Michael Burry, of course, of the Big Short fame.
Oh, man, there's so much to unpack here. Michael Burry betting against Treasuries, meaning he expects a rise in yield. We also know that he's betting against Cathie Wood's ARK ETF, and a few people have made the point on Twitter that that's the same trade.
Talk about that a little bit.
Yeah, so if you think that Treasury yields are going to go higher, that's going to hit the most speculative areas.
The high growth companies are
Yes.
the ones that Cathie Wood certainly thinks are going to be high growth in the future.
Exactly. She loves the disruptors. That's just another phrase for those speculative high growth companies. They don't do too well when interest rates rise because, their cash flows, they're going to come in the future. The discount rate rises. It's a lot of words to just say higher yields hurts those types of companies. I know, I'm trying. But yeah, it's the same trade. And you also see Citi, like you say, also recommending that clients position for higher Treasury yields, but we're not seeing them, Tim.
We're not. Monday's price action lending credence to the calls, though, with demand for the safest assets fading and benchmark rates climbing 2 basis points to 1.28%. That was as of 7:03 a.m. this morning, extending a rebound that sent yields to as low as 1.13% in the last month. So, Katie, what is the message that the bond market is sending?
I mean, it's hard. We know that this all depends on the virus, which is unknowable right now about, vaccine efficacy against, variants. Right now, though, the bond market is totally unimpressed. You still have benchmark Treasury yields unable to break above 1.3%. So a far cry away from some of those year-end calls for 2%.
All right. Check this one out at Bloomberg.com and, of course, on the Bloomberg terminal. Anything that mentions Michael Burry quickly gets to the top of the most read, and for good reason. This is Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So we have under 43 minutes until the closing bell and a rally in risk assets across the board. Let's get you the very latest now as we cross to the Bloomberg Macro Squawk Desk. Bailey Lipschultz is there. Hey, Bailey.
Hey, Doug, how are you doing? Stocks are trading higher with the S&P 500 and NASDAQ at records after Pfizer's vaccine won a full FDA approval. The Dow is up 260 points, S&P higher by 45, with the NASDAQ rising 235 points. U.S. 10-year yield is at 1.25%, and small caps are up 15 points. 8 of the 11 main S&P sectors are trading higher, led by gains in energy and communication stocks, while utilities and real estate are the worst-performing industries. NASDAQ Biotechs climbed 3%, transports gain 170 points, semis are up 90 points, while the VIX is lower by 8.5%. Leaders in the Dow, Boeing, Intel, and Chevron, while United Health, Walmart, and Travelers are among the worst performers. Pfizer and BioNTech rallied after their COVID vaccine won full approval from the FDA, and in deal news, Maxim and Analog Devices got China antitrust clearance for their deal. In news coming from The Telegraph, the outlet reported China's Didi suspended plans to launch in Britain and continental Europe amid rider data concerns. Wrapping things up, look for earnings from Palo Alto Networks after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Doug?
All right, Bailey, thank you. And a rally in crude oil, WTI in the extended session, 65.55. That's your Bloomberg Business Flash.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These funds are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
Today's Big Take, the very best of Bloomberg's in-depth original reporting from around the globe every day, is by Rich Miller, economics reporter for Bloomberg News. He joins us on the phone from Washington, D.C. It's all about Fed Chair Jerome Powell's policy revolution and how it was blindsided by the COVID-19 crisis. Rich Miller writes that when Fed Chair Jerome Powell rolled out a new modus operandi for running monetary policy at Jackson Hole a year ago, the economy was just coming out of a pandemic-driven nosedive. That was after a decade of disappointingly slow growth, with inflation stubbornly below target. Well, times have changed, Rich. What was the MO he rolled out a year ago, and where are we now?
Well, I mean, it's as you say, times have changed. We're at an inflation rate, at least by the Fed's measure, which is 2 times higher than they like. It's 4% instead of 2%. We're at an economy that's growing at rates that we haven't seen for decades, and we've still got a monetary policy setting that's the same as it was a year ago. So that's raising questions about whether the Fed is going to be too slow to try to rein things in, and that we're going to either get a housing bubble or some sort of financial bubble, or a return of something like we saw in the 1960s with inflation starting to creep higher.
So, Rich, it feels like the Fed is in a tricky spot because, if they wait too long and stick to the framework, they could risk what you just mentioned, that we could enter a multitude of different bubbles. But it feels like it would be difficult to back away from the framework without losing some sort of credibility. So, I mean, what do you expect the Fed to do here? Do you think that they'll stick it out, or do you think that they'll lift probably earlier than they might have wanted to?
It's a tough question, but it is a key question. I think for the first part, they're starting, and we're starting to hear that already, is that their rhetoric is going to start to turn a little more hawkish. I mean, and the aim of that is to keep inflation expectations in check. They seem to be well in check in the Treasury market because we have yields well down from where they were earlier in the year. But consumers seem a little bit more worried, and so they want to keep those. So you're starting to see the rhetoric shift, and I would expect that Chair Powell will give us a little bit of more insight, not too much, but a little more insight into their plans for beginning the taper when he speaks at the end of this week at it's a virtual Jackson Hole again this year because of COVID.
Well, I think that's an entirely new story on its own that we learned about late last week, that the fact that the Delta variant is running so rampant that this thing that they thought would be virtual or wouldn't be virtual would be for a second year in a row, Rich, would be virtual. I wonder about the Fed's dual mandate here and to what extent the Fed is willing to let the economy run hot in order to satisfy its other mandate, which is to get maximum employment. Like, how hot is the Fed gonna let the economy run hot?
Well, right now, they're focusing not so much on how high the inflation rate is, but for how long it's going to last. Stay there, right? So their story, and this is our story, and we're sticking to it, is that the inflation we're seeing is transitory. So I think, though, that argument may get a little stale as we get into next year. And so that may be the time when you might see them getting a little more worried, or they may turn out to be right, and inflation will settle back down. We've already seen some subsiding in inflation on some of the areas like rental car prices that have proven most troublesome. So, but I would think if you're still seeing pretty inflation like 3% or more at the end of this year, they might start getting more worried.
And so, Rich, this is something I think about a lot, and it's kind of impossible to answer, but if the Fed had known this pandemic was coming, if they had known that trillions of dollars of fiscal stimulus were on the way, do you think they would have committed to this new average inflation targeting framework?
I think, well, they were going off what they saw of a history of decades, right, of this whole secular stagnation story of Larry Summers, that, we for decades we've seen low inflation, low interest rates, and slow growth. And, ever since they introduced their inflation target in 2012, they've basically been short. So they were going on that. I think, you could argue that maybe they went a bridge too far in the forward guidance they gave. And when, not only did they have the framework, but they have the forward guidance, and they say, well, we don't expect to raise rates until we hit 2% inflation.
Right. Rich Miller, we're going to have to leave it there. Economics reporter at Bloomberg News, joining us on the phone from Washington, D.C. You can read Rich's story and more like it from Bloomberg's The Big Take at Bloomberg.com and, of course, on the Bloomberg Terminal. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec live in the Bloomberg Interactive Broker Studios in New York. Also with Katie Greifeld. She's a Bloomberg cross-asset reporter and my co-host of Bloomberg Quick Take Stock airs each and every day from noon to 12:30 on Bloomberg.com/QT. Katie, it's the moment that we've all been waiting for. Well, in a few minutes it is. where you actually get the title of Dave's Song of the Day correct, and you outperform me, who for the last 8+ months has, I think, probably gotten, what, Dave, 5 or 6 correct? Yeah, Dave's laughing it off.
I'm worried about this. I have 0 track record.
All right, well, you can only improve from here.
Okay, that's true. That's true.
Well, let's study, and in the meantime, we're going to get a check of the trading day with Doug Krisner. Hey there, Doug.
Hey, Tim. About 28 minutes until the closing bell. Risk assets continue to rally. This was set up when the FDA formally approved Pfizer's vaccine for COVID-19, and then earlier in the day, President Biden began to call on employers to require vaccinations, and now some speculation on an imminent FDA approval for Moderna's vaccine. Pfizer shares up nearly 2.6% right now, Moderna higher by nearly 7%. Intel has won an award from the Defense Department for domestic chip making. Intel shares up nearly 2.5%. Nvidia, among the chip makers, rallying as well with a gain of something greater than 5.3%. Nvidia rallying for a third straight session after those better-than-expected earnings. Dow Industrial Average right now with a gain of 0.8%. Energy shares leading the S&P 500 higher by 1%. NASDAQ comp rising about 1.6% right now. Speaking of energy, oil is having its best day of the year. WTI in the extended session up more than 5.5%, 65.57. Some of this may be tied to a little bit of weakness in the dollar, with the Bloomberg Dollar Spot Index dropping more than 0.5% right now. 10-year Treasury yielding 1.25%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much, Doug Krisner. This is Bloomberg. So, Katie, this is the moment when you come in and you say, I know what it is.
Oh, God. I don't know. I'm sorry. It sounds nice, though, Dave. I got to say, it's a nice song. I have no idea what it is, though.
I can hear the control room laughing at us.
I would like to know.
I would like to know, too.
Did you people read over the weekend at all, by any chance?
Yeah.
A little bit.
We read, Twitter, does that count? I'm answering
possibly.
for Katie. All right, Nancy Lyons is throwing me a lifeline here. I'm not Googling Everly Brothers.
Absolutely.
Oh, Nancy Lyons,
and
thank you.
And the song is...
I was
talking.
The
title was right in.
I know, I was talking. I was trying to come up with...
When will I be loved?
Oh, well, that's a question that a lot of...
Yeah.
That is a question.
And that song was later a hit for Linda Ronstadt as well.
Oh.
We should point that out.
Okay.
Anyway, I mean, over the weekend, the surviving Everly brother passed away. Don Everly, who died on Saturday at the age of 84. His brother Phil had predeceased him, died back in 2014. So,
wow.
So this one, no connection to the chart. We're playing Everly Brothers to commemorate the occasion.
And why not?
Why not?
There
doesn't
those
always
vocal harmonies, I mean, they were a real template for a lot of bands.
There doesn't always have to be a connection to the chart.
No, there doesn't. But there's no question that investors are being loved these days.
Okay.
Like companies looking to raise
Dave.
money.
There it is.
There you go. How's that?
It was perfect.
How's this for a saying, too? When the ducks are quacking, feed them. That's what the folks at GMO wrote, the other day in a report, kind of looking at some data that comes out of the Fed in terms of what they call net U.S. equity issuance. So we're talking about new shares, whether it's companies going public or, raising additional funds through stock sales, right? And we should note that it's non-financial companies specifically that the data tracks. What we've seen is the numbers have just taken off in the past year. Now, the most recent figure is for March, and the chart, as GMO did, tracks 12-month totals. So for the 12 months ended in March, which really, I mean, kind of captures the first year of the coronavirus pandemic, you're talking about a $226 billion capital raising. And, you know, you go back, that's 56% higher than it was back in April 2000, right after we saw the peak back then.
The chart that the visual representation of this on the chart, see it? You can see it at YouTube. You can see it with Dave's chart of the day. It's mind-blowing, Dave. It is so far above where things were back in the early 2000s.
Now, I did have a couple of readers ask, well, what about inflation?
Okay.
And actually, I went back and, you know, ran a calculator and found out that where we are now is pretty much where we were then in terms of, you know, an inflation-adjusted dollar amount of fundraising. So certainly comparable to the peak back in 2000. And to be clear, we are talking about new shares from non-financial companies.
Right.
I had people asking, does that count insider sales? No, it doesn't. They're existing shares. So that's what we're talking about here. I mean, it's understandable companies needed to raise money somehow if they were going to, you know, sustain their business in light of the pandemic. And for some, at least, you know, share sales were part of that.
And so, Dave, you say that this is a new worry for GMO. Can you walk us through that? Why is it worrisome that you are seeing such an amazing surge in issuance?
Well, they're worried, period, and have been for years, which is another thing that's
an important caveat when talking GMO, right?
Yeah, absolutely.
They look for sort of any sign that shows it's going to be a bear market.
Well, I mean, they've been pointing to valuation for some time as an issue, that stocks are just too darn expensive. So this kind of comes on top of, you know, price earnings or whatever indicator you like, you know, as another sign, at least for them, that perhaps we've gone too far.
Dave, at the same time, companies do want to take advantage of a stock price increasing in order to make sure that they have enough money for operations. Could this be a sign of that?
But I mean, yeah, when do you take advantage of it? When your shares are way up.
Yeah.
So the question is, how far up is up? And that's where GMO weighs in and takes this as a sign that things maybe aren't so promising. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, Dave, give us your stock of the day.
It's a company called Velodyne Lidar. And
I think you've done that one before, haven't you?
Oh, it's possible.
Okay, sorry.
But I mean, LiDAR is familiar because it's the technology behind self-driving vehicles. I mean, they've been working on this for a while. It's a company that went public through Blank Check Company last September. It had been sold by a group led by Ford Motor. So, you know, they decided, you know, we need a standalone company here. The ticker is VLDR. The share set a record low at the end of last week. And today, founder David Hall, who's also a 30% shareholder, called for the chairman and a director to resign.
Wow.
Basically saying they breached stockholders' confidence. So Velodyne up more than 17%.
Check for Dave's stock of the day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter @the1Dave. Let's get a check of the latest world and national news and perhaps music with Nancy Lyons.
No music. President Biden is celebrating, though, the Food and Drug Administration's full-scale approval of the Pfizer COVID-19 vaccine. Bloomberg's Irv Chapman has more from Washington.
The president noted that one reason that's been heard for vaccine hesitancy has now gone away.
If you're one of the millions of Americans who said that they will not get the shot until it has full and final approval of the FDA, it has now happened. The moment you've been waiting for is here. It's time for you to go get your vaccination today.
The Pentagon announced it will develop a timetable for vaccinating all U.S. troops, and the president called on private industry to follow suit. In Washington, Irv Chapman, Bloomberg Radio.
The White House says flights evacuating refugees out of Afghanistan are continuing hour by hour. Speaking with reporters, National Security Advisor Jake Sullivan said 26 countries across 4 continents are helping the U.S. transport refugees.
We have established a network of transit centers in multiple countries in the Gulf and Europe, where we are getting U.S. citizens on flights home, and we are running biometric and biographic background checks on Afghan evacuees before bringing them to the United States.
Sullivan says the U.S. is evacuating people faster than expected, airlifting 16,000 people in the last 24 hours alone. Outgoing New York Governor Andrew Cuomo is remaining defiant in his resignation speech today, saying he was treated unfairly leading up to him stepping down. He went on to argue the sexual harassment allegations brought against him were largely rooted in politics. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenevec in the Bloomberg Interactive Brokers studio in New York, joined by Katie Greifeld of Bloomberg Quick Take, also Bloomberg News cross-asset reporter. Katie, Goldman Sachs backs $500 million Beverly Hills hotel refinancing. This one among the most read on the Bloomberg terminal. The Beverly Hilton and adjacent Waldorf Astoria secured $500 million in refinancing from Goldman Sachs and Ariel Capital Corp. as the project's owners prepare to build a neighboring condo and hotel complex in Beverly Hills, California.
Yeah, this is an interesting story. It kind of reminds me of what we were talking about with Brooke Sutherland and the deals that we're seeing in the M&A space.
Yeah.
It's a tough time for the aerospace industry. It's a tough time for hotels as well. So to see a big deal like this, this new financing, it could signal support for the future of Beverly Hills properties in general.
Well, hotels were hit hard by the COVID-19 pandemic, especially properties that depend on conferences and events. Even now, we're seeing events that were planned to have been in person. I'm talking about Jackson Hole happening starting Thursday, that have moved to virtual because of concerns of the Delta variant. This new financing signals support for the future of the Beverly Hills properties. That's according to Jonathan Goldstein, Chief Executive Officer of Kane International, which partnered with Allegam Capital Group to acquire the Waldorf and Beverly Hilton back in 2018.
And this property in particular, it's known for hosting the Golden Globes, the Milken Conference, a bunch of heavy hitters there. But Tim, like you said, I mean, it's a very uncertain time whether we will go back to in-person conferences anytime soon.
Yeah, I mean, I think the selling point that people who are bullish on in-person conferences is that there's nothing like being around somebody in person, not just for deal making, but for introductions, for potential new deals. We see it with companies that say, hey, there's no substitute for in-person offices. Just bumping into someone in the hallway, or when you're getting water, getting a snack or something, is really important to work. The question is how do those change on the other side? Are they still as lucrative for companies that pivoted to some extent to these conferences as another revenue stream? And do people still travel across the country in order to participate in them in person? That's the big question. This is Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Risk assets are rallying. This is after the FDA formally approved Pfizer's vaccine for COVID-19. Pfizer shares right now the most heavily traded in the U.S. The stock is up just about 2.7%. And there's more speculation that the vaccine from Moderna may be next to receive FDA approval. These are both the mRNA vaccines. Moderna shares right now higher by nearly 7.4%. So as we make our way to the closing bell, we have the Dow up more than 0.7%. We could set a record close for the S&P 500. The benchmark right now higher by 1%. NASDAQ comp rising by more than 1.6%. Intel shares moving higher. The company's won an award from the U.S. Defense Department for domestic chip making. And right now we're looking at the Philadelphia Semiconductor Index pushing higher by just about 2.7% on the day. In the bond market, 10-year Treasury last quoted in New York at a yield of 1.25%. Mixed eco data today. On one hand, home sales posted a larger than expected increase in July. On the other, U.S. services and factories, their production growth slowed to around an 8-month low last month. I'm Doug Krisner, and that is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
We're driving to the close with just over 10 minutes away from the market close on this Monday, August 23rd, 2021. Stocks in the green. The Dow higher by more than 0.7%. The S&P 500 higher by more than 0.9%. The NASDAQ higher by 1.63%. Let's get right into it with Mitch Rubin, Chief Investment Officer and a Managing Partner at River Park Funds, joining us on the phone from New York City. Mitch, it's great to have you on the show today. Shares of U.S. equities are rallying today on the news that the Pfizer-BioNTech has been approved by U.S. regulators, fully approved. Are you surprised to see an equity market reaction such as this, considering that this was expected?
You know, we're in this strange time where I think people have this large perspective of risk on versus risk off. August is a light trading month, so small amounts of news can move the market. I think right now the biggest thing on people's headlines is, are we going to have another shutdown? And I think the more people think the vaccine is becoming more accepted, then we're more likely to fight back against Delta, and that's positive for the market and for equities and optimism. So it's not surprising to see a decent-sized move.
Do you think we're going to have another shutdown?
Yeah, I certainly don't think we're going to have a full shutdown. Could we have another spike of COVID that causes people to be worried? Certainly.
I mean, I think the difference now with where we were back in April of 2020, when we were seeing shutdowns, is we know so much more about the virus and the way it's spread and about vaccines. And we also know how to work in an environment that's hybrid, right? An environment that the virus is running rampant, but also one that still requires us to, and many people, to actually physically be in the office.
Yeah, I mean, I think there's a society conversation and there's a markets and economy conversation. I think the markets and economy conversation is the virus isn't a particularly important economic event. It's been our reaction to the virus in shutting down certain businesses and what is going to be our change in day-to-day life. And I think what the market is as a forward-looking mechanism is saying, okay, we're beginning to think beyond the virus as disrupting corporate earnings, and how do we think about what we're willing to pay for a stock or for equities for the next few years. I think in the near term, we're all hyper-focused on what does life look like for the next few months and years, and when do we go back to work, and when do we feel safe. And I think that disconnect is troubling a lot of people because the markets seem quite forward-looking and optimistic, and we're all still anxious and nervous and not quite sure what the new normal looks like for day-to-day life.
And so if we think about, where we are, August is supposed to be a pretty volatile month. You're supposed to see, over the past 5 years, about a 1.6% gain for the S&P 500. But if we think about the August that we've had so far, we've actually seen the VIX move lower. We've seen the S&P outperform, its 5-year average. I mean, where does that leave us as we head into September? Have we just stored up volatility, or can we continue to grind higher here? And can that disconnect you're talking about persist?
Yeah, I mean, I think what people, maybe using a slightly broader lens, I think most people are surprised when you tell them, hey, open your eyes for a second. The S&P 500 is up 20% this year, and despite all the conversation about growth and value and different things, growth stocks are up 18.5%. Value stocks are up 20% using just some of the large cap indices. Most stocks have done quite well, and the economy in general is strong. Interest rates are low. Earnings have come in very strong. I think if it continues to be the case that businesses do well and interest rates stay low, stocks are reasonably priced. Bonds are not offering much yield. It certainly is our opinion that the market still has an upward bias to it. I think the bigger question as we get it later into the year and into next year is, will the markets begin to have more dispersion? And it won't be just risk on, risk off, but which businesses are prepared for a post-COVID kind of digital-first future and which aren't. And as you get into 2022 and 23, not every company is going to have an earnings growth compared to a shutdown year in 2020. And it's our perspective that stock picking and which businesses you own is going to matter a lot more than do you own equities or are you in cash or bonds.
Mm-hmm. Yeah, well, I'd love to get into positioning a little bit more and how you are orienting your portfolio in this environment. Because if I look at the River Park Long Short Opportunity Fund, I see tech names like Amazon and Microsoft. I also see the iShares Russell 2000 ETF, a small caps ETF. Can you walk me through some of your top holdings?
Yeah, so we run both a large growth fund, which is fully invested in equities all the time. And then we also run a long short fund, which is really a traditional hedge fund, but offered in a mutual fund wrapper. I think what you're referring to in the long short fund is that some of our bigger longs, which definitely includes some of those high growth tech stocks, but a good diversified book of other growth businesses and other industries. Some of the indices you're pointing to are some of our short positions. So we hedge out our longs sometimes with market indexes where we think our long book will outperform the market as a whole, but more often with just individual shorts. And so we are short a little bit of the small cap index just as a hedge against our long book. And the belief we have is that a select group of equities, even though the market's had a good run, are still incredibly well positioned and reasonably valued for the future. But there are a lot of businesses whose future is less certain as we get post-COVID. And that is a really interesting time to be selective, and whether it's a select group of longs and not the whole market, or actually owning a long short fund, which has the ability to protect capital on the downside.
Well, let's talk a little bit about that and some of the shorts that you like. Peloton shares are actually lower on the day today because of a price cut at Oppenheimer. Why do you say that Peloton is not a sustainable volume of business post-COVID and that it's too expensive?
Yeah, I mean, the way we invest is what do we believe the business has the potential to earn 3, 4, 5 years from now, and how is it valued today? And Peloton is a business, it's a great product. It obviously was in the right place at the right time. But as we look to the future, we don't believe people are regularly replacing their exercise bikes. These are relatively expensive pieces of equipment. Generally, exercise stay-at-home exercises go in fads, and people buy one thing, and then a few years later they buy another. And Peloton is being priced as if the business they did during the shutdown was going to be perpetual and growing off that base. And so we don't necessarily think it's a poor business. We just think at $30 billion of market cap, the level of business they did in 2020 might be the peak level of business they ever do. And if we're right that people either won't replace their bikes regularly over time, or they move away from that fad towards another, that the business is just overvalued. Which isn't to say, again, we don't necessarily think they're going to miss the next quarter, or whether today's downgrade was right. We just think relative to the things we're long, Peloton is more likely to be lower in market cap 3 years from now than higher.
And Peloton does report later this week.
Yeah, I was just going to say.
Yeah, Mitch, really quickly, curious to hear about your thoughts on healthcare. We have just about 20 seconds.
Yeah, I think healthcare, like a lot of other industries, is going through massive innovation, and I think those businesses that are looking to use the combination of data and science in the future to make us all be able to treat things earlier, whether it's detecting cancer earlier or doing surgery with robotics and things like that. We think that's a fascinating place to invest in our businesses that are going to be a lot bigger.
We're going to have to leave it there. Mitch Rubin, Chief Investment Officer and Managing Partner at River Park Funds. Well, coming up next, it's Bloomberg's Beyond the Bell. This is our cross-platform coverage of the market close in just a few seconds. This with our colleagues from Bloomberg Television. It's on Bloomberg Radio and on YouTube. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell here to help take us beyond the bell. It's our global simulcast. We're joined right now by Tim Stanovic, and someone who's not Carol Massar. I believe that's the runner-up in the Milk Crate Challenge. Katie Greifeld there, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse the crucial moments of the day. And Tim, this is quite a day here because you remember about a week ago, we were talking about this big sell-off here and whether there was some big correction afoot here in the markets. And, well, at least for now, that doesn't appear to be the case.
Yeah, we're talking about 2 days in a row of rallies now. And I think when we talk about crucial moments of the day, Romaine, we got to talk about the United States giving full FDA approval to the Pfizer and BioNTech vaccine. The idea here, of course, is that this approval could lead to more vaccine mandates. It would really help quell the surge in the Delta variant. And I wonder, Caroline, if we're going to start to see more stories like we saw already today. Chevron, the Wall Street Journal reporting, requiring vaccine for some oil field workers. New York City teachers and teachers in New Jersey required to get vaccinated. And that's why we're seeing the green on the screen.
The Pentagon, too, as well. And this is why, in large part, the NASDAQ had a new record high, S&P 500 too, but some of the biggest tugs higher, interestingly, is those vaccine names, Moderna doing a lot of the heavy lifting, but also those two big tech. What does that mean when Amazon and Nvidia and Tesla and Apple and Google are doing so much of the lift, Taylor? What does that mean about sentiment, really?
What does that mean about sentiment? Katie, I punt this on over to you as we're getting huge calls, not only about some of the sentiment that we see within the equity markets, but the sentiment in that call for that reflationary trade, Katie, within the bond market as well. It's Citigroup, it's Morgan Stanley, it's, well, Michael Burry, all positioning for higher yields at this moment.
All right, you're hearing the closing bells here in New York. The Dow Jones Industrial Average looks like it's going to finish higher here on the day, up about 0.6%. That's not going to be good enough for a record high, 35,336. But here's what is good enough for a record high, 44.79 on the S&P 500, up 38 points or 0.9% on the S&P 500. Third straight day of gains there. The NASDAQ composite up 228 points here, 14,942, up about 1.6% here. And the outperformer of the day, that belongs to the Russell 2000. The Russell 2000 climbing up about 1.9% here, Katie, 2208, still a long ways away from that record high hit back in March, but nevertheless getting in on the party. Maybe you'll start talking about that reflation trade again.
Yeah, it's fascinating to see the Russell 2000, like you say, really outperforming today. Typically, you would expect to see Treasury yields climb along with it. Not so much today. If you look at the 10-year Treasury yield, actually finished a hair lower at about 1.25%. So a far cry away from that 2% year-end target that we just got from Citi.
But you're really seeing some of those push-pull dynamics, Katie, that we talk about in this reflationary environment. You're still seeing that very much play out within equities. For our radio audience, we're taking a look at some of the sector winners, the sector losers. I have to say the sector winners, it is that reflationary trade. It is energy up about 3.8%. It's autos, it's semiconductor equipment. Those are also up about 3%. And then banks and media up there, which you could say is maybe more of a yield call. We migrate downwards, though, to the bottom. And of course, it's real estate and utilities, which are some of the big laggers, despite, Katie, the yields aren't moving higher. Those are some of the worst performers on the day. But overall, you could say a pretty risk-on theme within the equity markets.
For sure. You definitely saw that reflected on the S&P 500 leaderboard. And I'd like to highlight a few of the stocks. We saw Moderna, the second biggest gainer in the S&P 500 today, which was interesting because it was Pfizer and BioNTech that actually got the approval, but traders are betting Moderna, maybe it's coming up next. That stock finished over 7% higher. Norwegian Cruise Lines also going along with the reflation trade, Also got a big lift today on the heels of that full approval news. That stock finished 4.4% higher, beating the broader market. And finally, I mean, we got to talk about Bitcoin a little bit. It did break above briefly that $50,000 level. So that did give a lift to your crypto-linked stocks. I'm looking at Marathon Digital in particular. That is a miner and finished over 4% higher.
Wow, Bitcoin up more than 70% from its lows of July, not that long ago. Yeah, it's. Did you say fundamentals, Romain?
Yes, I did.
It's because of those future cash flows. Is that why it's
Yes,
higher?
exactly.
Let's talk about notable decliners today. Bitcoin not among them, but General Motors certainly is, finishing the day down more than 1.2%. I got to say, guys, it was a tough haul to actually find decliners that stayed lower today. We know why. Late Friday, the company, after the market closed, said it was expanding the recall of its Bolt EV. It's going to cover remaining 2019 vehicles, also 2020 to 2022 model years. The company's going to replace those defective battery modules. The expected additional cost could be about $1 billion, the company said in a statement. Shares lower as a result. Peloton is reporting earnings after the bell on Thursday. We'll bring those to you live. Before that, though, Oppenheimer cutting its price target from $150 to $140. Here's an interesting analysis. The company says that outgoing visits to Affirm, that's the buy now, pay later site that partners with Peloton to finance these, fell 38% quarter over quarter and were down 33% from June to July, so a sign of weakness there. And Dash finishing the day down lower by half a percentage point. Earlier in the day, we did see those ride-hailing firms Uber and Lyft lower. They did recover. Dash, though, staying in the red because that California judge, Caroline, striking down a ballot measure that declared drivers for the companies were independent contractors. I should say, analysts don't see it as a big game changer, but they did warm up some short-term weakness in the stocks as the news may weigh on investor sentiments, and of course, litigation could take time.
And DoorDash lived up to that short-term weakness, even though Uber and Lyft did manage to bounce. Tell you what also is bouncing is basically every other currency pair versus the US dollar today. I'm looking cross-asset, global macro movers, and really sea of green when it comes to the G10 currencies versus the US dollar. The dollar index off by 0.5% for our radio audience. I'm seeing the CAD, the Canadian dollar, the loonie up 1.3%. Aussie dollar also up more than a percentage point. That as we see commodities really push higher. I mean, a phenomenal day for oil. Best day for oil in 9 months. And we see WTI crude up 5.3%. $65 is where we trade. Still not up to the lofty levels where Goldman Sachs perhaps sees it going at about $80. But generally, we're starting to see maybe a little bit less worry about China as they manage to stamp back COVID cases to that zero tolerance level. We're also seeing, of course, optimism that maybe they won't hit the wealthy quite as hard as had been worried about in China. The Delta variant, though, still front and center. We're seeing all-important milk. A lot of chat on Twitter about milk being higher on 2.4%. We won't go there. But meanwhile, sovereign bonds around the world, a little bit less need for that safety haven trade tailored. Japanese debt, for example, yields push higher. Portuguese, Swiss, Italian.
And you're seeing pretty much none of that, unfortunately, here in the U.S. Carolinas, we're unch on the day, as excited as we could get. Really well-behaved 125 on the 10-year, 187 on the 30-year, and really range-bound. And that was pretty much the call, pretty much from BMO Capital Markets, saying that all of the mixed push-pull data, good housing numbers, bad PMIs, Tim, really puts us in this range-bound scenario, despite what the equity markets might be telling you, Tim.
Yeah, well, the equity markets are certainly saying, hey, we're pretty excited about this FDA approval of this vaccine and potentially pricing in a Moderna vaccine full FDA approval, Romain. The question that I've been struggling with throughout the day today, guys, is this was reported on Friday, and I wonder why we didn't see that priced in on Friday, late last week, and why we did see such a surge today. Well, we did. What new information did we get, Romain?
Well, we didn't, but we did see a little bit of a run-up. We did get the confirmation. But I also think people are focusing maybe a little bit too much specifically on the vaccine announcement and a little bit less on some of the data that we got with regards to new cases as well as the percentage of deaths from those cases. That we saw a dramatic improvement over there in China. We were actually starting to see some improvement here in the U.S. There was a great story on the Bloomberg terminal that kind of talked about how that even though they're sort of pushing for this next leg of vaccines, you're already starting to see some of the worst of this Delta surge moderate a little bit. And I think the market may be reacting to some of that maybe the worst case fears that we were headed for another shutdown, that might not necessarily be the case.
But when you've also got the weak PMI data coming out, maybe, I mean, it's still growth, guys, let's put it into perspective, but not as growthy as we're used to, about the lowest set of growth for PMI composite since we've seen back to December. Is it the bad news is good news? Is it that we're now expecting from Jackson Hole, from the Federal Reserve, a little bit more of a dovish tone? Does that mean, look, that punch bowl's still going to be rolling?
Yeah, we'll see. And I think it's telling that this is now a virtual conference. I mean, that gives you a pretty clear read on how the Fed is thinking about the Delta variant. Obviously, it's enough of a concern that they would do this virtual.
So because it's virtual, everyone says nothing's going to happen. You believe that?
Well, we've been virtual for the past 18 months with most of what we've done and stuff has happened, right?
I don't know.
It was pretty big last year, right?
Yeah, it was pretty big.
I heard, yeah.
The Big Take says it was pretty big today. Yeah.
Are we doing those still?
Yeah, oh yeah, we had a great one on Fed Chair Jerome Powell, Powell's policy revolution.
You know, it was so funny.
Only a moose. Oh, it's a moose.
That's a moose, Taylor.
Oh, Taylor.
Oh, jeez.
For our radio audience.
Girl out of Cali, but.
All right, so what are we expecting? Look, I mean, I was coming in this morning listening to Jimothy on the radio, and I'm curious as to whether we should expect to actually hear them say something material that differs from the communication that we've gotten over the past few months.
I think you raise a really good point, and I think potentially we will. And I'm only saying that because of the data that has shifted with the Delta variant and the note that we got last week on Wednesday with the minutes from the most recent meeting. The one big caveat in there, guys, was if the data changed when it came to the Delta variant, and a virtual of Jackson Hole is a way of certainly saying that. But we're going to have to wait and see, and I'm going to have to wait and see the four of you again tomorrow, because that is going to do it for our coverage of Beyond the Bell. Our cross-platform coverage continues tomorrow, same time, same place on Bloomberg Television, Bloomberg Radio, and YouTube. We'll see you later.
Me, Maya.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio. All right, well, there you have it. The close of the trading day on this first trading day of the week, Monday, August 23rd, 2021. Let's go over the numbers one more time in case you missed them. The Dow rallying more than 215 points, up more than 0.6%. The S&P 500 higher, Katie, by more than 0.8%. The NASDAQ higher by more than 1.5%. But as you pointed out, small caps, the real winner today.
I know. It's interesting to see that reflation reopening trade really roar back to life on, like you were saying, Tim, we knew this. This was expected. Apparently not in the price, though.
I think Romaine brought up a really good point when it came to COVID data and what we're seeing, and to what extent things could have peaked in the South and what that says about how the Delta variant is making its way through there and could make its way through other parts of the country. It's exhausting, but it's what the market is looking at, and something we're certainly bringing you the latest data on as well. Let's get a check of the latest when it comes to world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. The Food and Drug Administration is granting full approval to the Pfizer COVID-19 vaccine. It's news many agencies and businesses have been anticipating before mandating a shot themselves. President Biden is urging people who have waited to step up.
If you're one of the millions of Americans who said that they will not get the shot until it has full and final approval of the FDA, it has now happened.
Biden says with the Delta variant sweeping across parts of the country, there's no time to waste in being vaccinated. Well, among those who will be the first required to take the vaccine are the nation's troops, according to Pentagon's John Kirby.
We're going to move forward, making that vaccine mandatory. We're preparing the guidance to the force right now. And the actual completion date of it, in other words, how fast we want to see it get done, we're working through that guidance right now.
Again, the Pentagon's John Kirby. The U.S. says it is receiving help from multiple countries in its mission to evacuate Americans and Afghan allies out of Afghanistan. National Security Advisor Jake Sullivan was asked today if the U.S. can meet the August 31st deadline to leave.
We are in talks with the Taliban on a daily basis through both political and security channels. I'm not going to get into the details of those discussions here to protect those discussions.
Sullivan says 16,000 people have been evacuated in just the past 24 hours. New York Governor Andrew Cuomo will be leaving office just before midnight tonight. He gave a farewell speech today and said the Attorney General's report on sexual harassment allegations against him was driven by politics. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks so much for that update, Nancy Lyons. Tim Stenovic, along with Katie Greifeld in the Bloomberg Interactive Broker Studio in New York. And I got to tell you, I love a good real estate story. This one, for good reason, among the most read on the Bloomberg terminal. It's all about suburban New York City homebuyers pressing on with return to office influx. So New Yorkers are still swapping their tiny city apartments near subway lines for suburban abodes with backyards, even though, as employers signaled, they eventually want workers back to their Manhattan offices. So it doesn't show significant signs of move to the suburbs slowing down anytime soon.
Yeah, it's amazing. I love that line. Still swapping their tiny apartments because, I mean, what?
We can all relate to this.
We can all
both,
relate.
I should say both of us can relate to this.
But we're a year and a half into this pandemic. This trend has been going on for so long. And I mean, as the article points out, employers want their employees back in the office. It feels almost like a game of chicken.
It does, but it doesn't seem like employers have said yet, you know, we want you back in the office 5 days a week. And the other thing that we've seen with this is the Delta variant and the way that that has upended plans to return to work. Not just for companies here in New York, but for companies around the country, around the world, I should say. Look at Facebook and Apple, the way that they push their return to work. Look last week, what we heard from State Street. And State Street closing its New York City offices. Even though it's not based in New York City, it's based in Boston, but it's not going to have offices anymore. And I wonder, Katie, if we're going to see, okay, perhaps 3 days you have to be in the office.
Right.
If you have a 2-hour commute, that 2-hour commute is a lot less bad if you only have to do it twice a week.
Exactly. That becomes much more manageable than thinking, I'm going to spend 4 hours a day, round trip, 5 days a week commuting. I mean, that seems like a very 2019 thing to do.
Listen to some of these anecdotes here and some data. Home prices in places like Greenwich, Connecticut are topping last year's exuberant highs, with properties in New York's Hudson Valley setting records for how fast they find takers. In New Jersey, one appraiser sees at least another year of soaring prices as a result of relentless demand. Throw low interest rates into this, and you have prices continuing to go up. This is Bloomberg Business Week, and this is Bloomberg Radio.
Okay, traders, let's place stop on profit for euro even further, and I'm going to place stop on profit to 117.41.1. Okay, so if you follow my trade, please do so. Please move your stop on profit for euro against United States dollar at 117.41.1. Okay, stay safe, guys.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's all about the Pfizer vaccine, isn't it? We had risk assets rallying after the FDA formally approved Pfizer's vaccine for COVID-19. The stock was the most heavily traded here in the U.S. with a gain of about 2.5%. President Biden now calling on employers to require vaccination. Chevron, the latest, its employees who work on platforms in the Gulf of Mexico must get vaccinated given surging caseloads across the southern U.S. Chevron shares were up about 2.6% today. But don't be misled. That's really an oil story. WTI crude in New York with its best day of the year. We were up about 5.6% today. Goldman Sachs saying that oil was completely oversold after last week's downdraft. A weaker dollar obviously helping out, boosting not just oil, but other dollar-denominated commodities as well. Today, the Bloomberg Dollar Spot Index was down about 0.5%. We had the Dow picking up 0.6%, the S&P 500 higher by about 0.9%, and the NASDAQ Composite gains nearly 1.6% on the day. Intel rallying after the company won an award from the U.S. Department of Defense for domestic chip making, shares up nearly 2.5%. Also among the chip makers, Nvidia at a record high with a gain of more than 5% on the day. And while we're talking chips, the Philadelphia Semiconductor Index was up about 2.6%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Well, LinkedIn is having a moment. The Microsoft-owned company announced last month that it reached $10 billion in fiscal year revenue for the year 2021. That's up 27% from last year. Joining us now to talk all about that and more, including how working from home will be the future, or perhaps it'll be hybrid, or perhaps we will be going back to those offices full-time after all, is Dan Shapiro, Chief Operating Officer for LinkedIn. He joins us now on the phone from Palo Alto. Dan, how you doing?
Good. Thanks for having me on.
Yeah, thanks for joining us, and thanks for coming on. We really appreciate it. Hey, let's talk that 27% revenue growth from last year. What is working so well for you at LinkedIn?
Well, LinkedIn is a platform for helping companies and professionals build relationships. And I think if there's anything we've learned over the last year is that we need, as a society and as a business community, to be able to build relationships as the world increasingly moves digital. Whether that's how companies build relationships with their customers or employers build relationships with talent, whether that's their existing employees or future employees. And all of that transition is leading to more and more power of the LinkedIn platform to help companies solve problems.
And so, Dan, I'm curious to hear if you think that people changed the way that they use LinkedIn during the pandemic. Because just speaking personally, I can think of so many friends who really thought critically about their life and career and what kind of career they want to have. And they use LinkedIn for it. I mean, have you seen more people looking for jobs on the platform or just starting conversations?
We're absolutely in a time where professionals everywhere are thinking about what they want from their career, how they want to work, where they want to work, and it is leading to something that we're seeing called the Great Reshuffle, where both companies and professionals are reassessing a number of ways in which they've been working for a very long time. And so in a time like this, you're seeing more exploration, you're seeing greater curiosity about different kinds of jobs. And one thing in particular that we're seeing is both companies and professionals considering remote work options. If you actually go back in time before the pandemic, only about 1.5% of jobs in the U.S. on LinkedIn had a remote option. Now, fast forward to today, that number is over 11%, and over a quarter of all applications on their platform are going to remote jobs. And that's particularly the case in some of the most highly skilled roles like in tech or in media.
Hey, Dan, help us understand, this data more, because you guys have such a granular view of what people are interested in, the types of jobs people are interested in. Is there much more interest around a company that offers a hybrid or a remote position rather than one that says, hey, this is in office? Like, are you seeing a quantifiable increase in the number and quality of candidates going for that job?
There's no question. First of all, 87% of professionals in the U.S. want to work in a role where they can be remote or hybrid at least half the time. And we're seeing, particularly in skill sets that are in high demand, that our employers are adjusting their policies to be attractive to those kinds of professionals. So the number of jobs that have a remote option has gone up materially. Roughly 1/4 of all jobs in the U.S. in tech and in IT services are now remote enabled. And we think that that's going to continue because those are the skills that are in high demand. And that's what many professionals now have come to expect from their employer.
And I'm curious, I mean, you mentioned you expect this to continue. I mean, is this a permanent change, though? I mean, in reading all of the headlines on the terminal about...
Well, in the real estate story we just talked about,
Yeah.
like if people move to the suburbs.
Yeah. So building on that you are still seeing this push into the suburbs. Maybe people will be able to stomach a 2-hour commute if it's only done, 2 or 3 days a week. But, I mean, at a certain point, does this fade? In 5 years' time, I mean, would you expect that companies are still offering hybrid situations as a perk of sorts?
What people want is flexibility, and that's going to mean different things to different people. For some people, flexibility is going to be about balancing home and work. For some people, it's going to be about physically where they live and where they have their lives. How do they live in a place that's either closer to family and friends or to the activities that they care about? And that expectation of flexibility is going to continue. And we think it's going to be most prevalent in the skill sets that are in the highest demand. So think about technology jobs or media jobs. These are the roles where...
Wait, media jobs are in high demand? Hold on. Talk about that. Are they? Are they, Dan? Like, media jobs in high demand? I mean, we hear so much about the media industry. And look, there are a lot of new media properties launching, but talk a little bit about that in just the last 30 seconds, and then we're going to come back with you.
Yeah, I mean media and marketing generally across the entire economy. I'm sure that there are pockets that have different dynamics, but you are seeing that roughly 1/4 of jobs in tech and media are offering now a remote option on LinkedIn.
Dan Shapiro, sit tight with us, Chief Operating Officer at LinkedIn. Hang with us because we are going to be coming back to you in just a few minutes. We're going to do some news. We're going to check how the business day wrapped up and get right back to you in just a couple of minutes. That's Dan Shapiro, Chief Operating Officer at LinkedIn, joining us on the phone from Palo Alto. Yeah, Katie, I think the big question that I have is, to what extent it's the one you asked, is how long is this remote work or hybrid work environment? Is it going to be like that in 5 years?
Exactly. Ton of momentum around it now. Curious to see. Does that actually last?
You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenbeck and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. In just a few minutes, we're going to get back to Dan Shapiro, Chief Operating Officer at LinkedIn. He's joining us on the phone from Palo Alto. Katie, it sounds like, and look, the data is there to back it up, but the fact is if you put these things in your job openings, you are attracting more candidates, right? Remote work, hybrid work environment, you're reaching more people.
Exactly. It feels like it's the new foosball table or something like that. It is really viewed as a perk. And I mean, if you look at...
That's a good point.
Just anecdotally, so many people, so many young people that I know that are looking for jobs, like Dan was saying, they want the flexibility. They don't want to spend 50, 60 hours in an office every week.
Yeah, it certainly makes sense. We're going to get more with Dan Shapiro in just a few minutes. In the meantime, let's get a check on the latest when it comes to business news with Doug Krisner. Hey, Doug.
Hey, Tim. So we had a rally in risk assets today. It was inspired by the move on the part of the FDA to formally approve Pfizer's vaccine for the virus. Pfizer shares were up 2.5%, the most heavily traded issue by a mile. And there's now speculation on imminent approval for the vaccine from Moderna. This is also an mRNA treatment. Moderna shares were up 7.5% today. We're getting this over the Bloomberg terminal. Reuters is now saying the Securities and Exchange Commission has given firms in China some new rules for disclosures should they file for an IPO here in the U.S. It was very interesting because last week the Hang Seng, the market in Hong Kong, officially entered a bear market. Overnight, the Hang Seng actually recovered a bit, higher by more than 1%. And I know the guys on Daybreak Asia are going to be keeping a very close eye on this story. We have the Dow Industrial Average today, higher by 0.6%. S&P 500 picks up about 0.9%. That's a record. Also an all-time high for the NASDAQ Composite, which was up nearly 1.6% today. And oil with its best day of the year. WTI up more than 5.5% in the regular session. Goldman Sachs was saying as a result of last week's downdraft, oil was simply oversold. Also want to point out the effect of a weaker dollar in boosting oil prices. The Bloomberg Dollar Spot Index today was down 0.5%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Let's get right back to Dan Shapiro, Chief Operating Officer at LinkedIn. He joins us on the phone from Palo Alto. Hey, Dan, it was so interesting. I don't know if you heard what Katie said about remote work being the new foosball table in the sense that it's a real perk. I completely agree with that and the idea that managers need to be thinking about the best ways to attract and retain talent, because if there's one thing that has emerged when it comes to the way that my friends and my friends really are thinking about over the last year and a half, it's really about their careers. And we're having this issue right now with managers all over trying to attract and retain talent. What are the lessons that you can take away and give to managers who are listening right now about the data that you see at LinkedIn about the best ways to attract and retain talent at a time when even though the labor market is not tight, it is tight, right?
Well, I think we are seeing the labor market get tighter over the last quarter and into the coming quarters. You're seeing that the resurgence in certain parts of the economy is leading to very aggressive hiring in certain sectors. And that is actually ahead of people's general willingness to change jobs right now. Many people have been, and some continue to be, what they call shelter in job, where because the environment's uncertain, they tend to stick to what they are doing. But every research study you see speaks to the fact that many people are considering a change. So the question is, how do you make sure that if you have a member of your team that is thinking about change, how do they make sure that they're exploring changes within your organization or within your team as opposed to outside? And they're going to get to questions like, how do I want to work? Where do I want to work? Do I work at a company that aligns with my values or what's important to me? And we continue to find that the employers that are getting the most attraction from candidates, particularly those in highly skilled jobs, are the ones that are answering those questions and realizing that their employer is aligned with what they want to accomplish in their careers.
Hey, Dan, I'm curious if this is particularly prevalent in any specific industry. I mean, obviously there are some jobs where you can't work from home. You can't do it from your basement, but there's a lot of jobs in corporate America that you can. So I'm curious where we're seeing that the most if you look at the landscape of the American workforce.
It is happening quite a bit in higher demand job segments that can be done remotely. At the end of the day, what people want is flexibility, and that means a variety of different things for different folks. For some people, that's more flexibility about how to fit their home and life together. For some people, it's about coming into the office not to do work, but to collaborate and build community with their colleagues. And that's leading to changes in things such as rethinking what an office looks like. 2/3 of executives are reconsidering their physical office space layout by virtue of what's been happening, thinking of it more of a place for people to come together and collaborate as opposed to people sitting at their desks and doing one-on-one work. So there are so many changes that are afoot, but we so far see that this is a trend that is very clear, and it's going to become the most prevalent in the highest demand skill sets.
Hey, Dan, a few of our colleagues spent the weekend dropping their kids off at school for the first time at college as students in the United States go back to school and begin their time in university. Based on the data that you have at LinkedIn, what should these students be thinking about when it comes to how they should think about their majors and what they're going to study? What are the areas so when they get done with school, when they graduate, they're not saddled with debt that they can't pay back because they can't find a job that pays enough?
There's a general trend that's happening that we're a big believer in at LinkedIn of taking a mindset around skills rather than degrees. And so the question that I would ask, your friends' kids or other people that you know is what kind of jobs are you interested in? And maybe they haven't figured that out yet, but they can start to explore those ideas. And what skills are important to employers in those categories? And so then rather than think about a major or a degree, think about skill sets and how they build evidence of those skill sets that they can showcase to employers as they come into the job force.
And so, Dan, I want to ask about the business of LinkedIn, the company itself. So, like Tim mentioned earlier, you recently hit $10 billion in revenue. I'm curious how much of that is just in the U.S., or what does the landscape look like abroad when it comes to LinkedIn?
Well, LinkedIn as a business our membership is 3/4 outside of the United States versus in the United States. So a very global platform, and roughly half of the business is international as well. And we are continuing to see international and global engagement be a fundamental part of how we grow LinkedIn. At its core, LinkedIn is a platform for economic opportunity, and we try to achieve that on a global basis. And it is something that we think is important, particularly in an environment where engagement between people around the world is a fundamental part of how business gets done.
Dan Shapiro is Chief Operating Officer at LinkedIn. He joins us this afternoon on the phone from San Francisco. Dan, thank you so much for taking the time and for chatting with us all about the latest at LinkedIn and the first fiscal year, $10 billion in revenue. Let's get a check of the latest when it comes to world and national news. Nancy Lyons is in D.C. Hey there, Nance.
Hey, Tim. The Pfizer-BioNTech COVID-19 vaccine has received full approval from the FDA. President Biden says it's time for those who've been hesitant to now roll up their sleeves.
The moment you've been waiting for is here. It's time for you to go get your vaccination and get it today. Today.
Biden says the shot is not only safe, but widely available for free at thousands of locations all across the country. Search crews are working through shattered homes and tangled debris in Tennessee, looking for dozens of people still missing after record-breaking rain unleashed floods that killed at least 22 people. Maggie Moran lives in hard-hit Waverly, Tennessee, and says it's hard to have hope.
There's so many people out looking, and then you find someone, like, just on the side that they have already looked, and you just keep finding more people just laying there.
Moran says it's a devastating situation. The flooding this weekend took out roads, cell phone towers, and telephone lines, making it even harder for residents to know who has survived. This is the last day in office for New York Governor Andrew Cuomo. Lieutenant Governor Kathy Hochul takes over at midnight, becoming the state's first female governor. Cuomo maintained his innocence during his farewell speech and says it was politics that drove the probe.
When government politicizes allegations and the headlines condemn without facts, you undermine the justice system. And that doesn't serve women, and it doesn't serve men or society.
Cuomo announced 2 weeks ago he would step down rather than face a likely impeachment battle over sexual harassment allegations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Katie, among the most read on the Bloomberg terminal today is a story from the Wall Street Journal Dow Jones about how to game plan your office days. This is an overachiever's guide to hybrid work. This written by Patrick Thomas at Dow Jones.
Yeah, it's interesting. So it seems like 3 days in a week is what, I don't know, a lot of companies are settling on. But this story, it's interesting. It goes into which 3 days. You know, do you come in Monday through Wednesday, Tuesday through Thursday? How do you game plan that? How do you stand out to your managers?
Which are the days that your boss is going to be in there and see you toiling away so hard at your workstation and being so productive and being so focused and being so on task and making sure that you're doing the best job you can do?
Probably not on Fridays. I feel like that's the gimme day that just no one's going to be there.
It does seem like, and I forget which family member I was talking to about this, but there are certain days where, you know, you have the executive team at places that aren't fully returned to office yet, right? There are certain days of the week where there are executives from the company that come back to work, and perhaps you time your return and you focus on that being one of the days that you're in there.
Absolutely. I mean, if you really boil down to it, the honest truth is part of the reason people would want to return to the office is to be seen being there. So you'd want to be most strategic about when would you actually be seen? Who would see you at that point? So. Yeah,
in this story in Dow Jones, Patrick Thomas quotes Peter Capelli, a management professor at the University of Pennsylvania's Wharton School, who says, quote, your boss's schedule is your schedule. In other words, if you know your boss is going to be in on those days, then it's probably a pretty good idea for those days you to come in as well.
Absolutely, yeah. And also, you know, for meeting with people, not just being seen, but also if you're trying to get the most bang out of your office buck, you'd want to actually be around your coworkers.
I also think what you said about Mondays and Fridays are particularly right.
Yeah,
like people like to extend those weekends at home or perhaps start those off a little early, even pre-pandemic, right?
Absolutely,
Yeah.
Come on.
This is Bloomberg Radio, and this is Bloomberg Business Week.
hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So as we get set for trading in Asia, we are learning the Securities and Exchange Commission has reportedly given firms in China some new rules for disclosures before they filed for U.S. IPOs. Reuters is reporting some Chinese companies have received detailed instructions about the need for greater disclosure of their use of offshore vehicles for IPOs, as well as disclosing the risk of interference by Chinese authorities. We had a lot of risk appetite in the U.S. today on a day when the FDA formally approved Pfizer's vaccine for COVID-19. Pfizer shares, the most heavily traded, up about 2.5% today, and now a lot of speculation on imminent approval for Moderna's vaccine. Moderna shares were up 7.5% today. Dow Industrial Average picks up 0.6%. We had the S&P 500 finishing at an all-time high, 44.79. The gain here was nearly 0.9%. Also a record finish for the NASDAQ Composite at 14,942 with a gain of nearly 1.6%. 10-year Treasury last quoted in New York at a yield of 1.25%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Well, the book is a tale of greed, theft, and global finance. It focuses on the story of Arif Naqvi, the self-made founder of the Dubai-based private equity firm Abraj. But in 2019, Naqvi was arrested on charges of fraud and racketeering and now faces up to 291 years in jail. Simon Clark and Will Lauch, journalists at the Wall Street Journal, they were the ones who exposed the alleged wrongdoing. And Simon Clark joins me now. He's on the phone from London. He's the author of the new book, The Key Man, the true story of how the global elite was duped by a capitalist fairy tale. Simon, it's so great to have you with us. I just want to start by you taking us back a few years ago. Take us back to 2018, when you and your co-author, Will Lauch, were reached by an anonymous whistleblower. What happened?
Hi, well, it's good to be here. In January of 2018, we were contacted by a whistleblower who wouldn't give their name via email, and this person told us that hundreds of millions of dollars had gone missing from an Abraj fund, which was supposed to be used to buy and build hospitals in some of the poorest countries in the world, in Africa and South Asia. Because this person didn't give their name, we couldn't use that information immediately to write an article, so we had to go out and speak to dozens of people to verify this information, which turned out to be true. Investors in that fund were investigating whether or not their money had been misappropriated, and that was the first article that we wrote on February the 2nd, 2018. The extraordinary thing, one of the extraordinary things about this whole story was that at the time we were investigating this in January 2018, Arif Naqvi was at the World Economic Forum in Davos, and while he was there, he participated in a televised debate with Bill Gates about global healthcare, and the Gates Foundation was one of the investors in his healthcare fund, which was investigating whether or not its money had been misused.
Wow.
So while we were exploring whether or not there was a serious problem between these two men, they were on stage debating each other as if everything was fine. And that was the beginning of a long, many months of investigating for us.
That is amazing. That's an amazing story. And I mean, it feels like there's so many ironies in here. The ultimate one being that Naqvi was an impact investor. Like you said, he was pitching that he would buy and build hospitals, that, you know, he could help stabilize the Middle East. Did any of that money actually go to those purposes, or was it all swindled?
No, Abraj did make investments in companies, and some of those investments were successful. The problem was that the firm was also moving money around its various funds, paying off some investors with money which it shouldn't have been used for those purposes, and moving money out of the firm which should not have been moved out of the firm. It wasn't a pure Ponzi scheme, but there were Ponzi-like elements to the way the funds were being managed. And as you say, the thing that's really quite extraordinary about this whole story is that in your traditional fraud scenario, investors hand their money over with the expectation that they will make more money. They invest in a fund because they think that fund is going to be profitable and successful. The pitch of a barrage to investors, which included the Gates Foundation, Bank of America, the US government, the British government, and so on, was, give us your money, we will make more money, and at the same time we will end poverty by investing in businesses in developing countries, creating jobs, providing services. And according to our reporting in The Key Man, and also according to criminal prosecutors in the US and regulators in the US and in Dubai, that's not what happened all the time. The firm was raising money and misusing the money.
Hey, Simon, I'm wondering, you say it had Ponzi-like scheme elements to it. It wasn't a traditional Ponzi scheme. If we think about Bernie Madoff's Ponzi scheme, the way that he was able to hide this from investors was by offering up doctored or fake statements in terms of brokerage statements. I'm wondering how Naqvi was able to hide this from his investors, or is it a story about private equity not being necessarily as transparent as straight-up equity investing?
Private equity definitely enjoys more secrecy than it deserves in general, but that doesn't mean that every firm is, by any means, mismanaging money, right? I mean, what we do know in the case of Abraj was that money was being misused, and we don't have a lot of transparency on what goes on in the industry in general, but most firms presumably are behaving properly. In the way that Abraj was managing money, there was a lot of deception going on. So, for example, in the billion-dollar healthcare fund that the Gates Foundation was in, money was being moved out of that fund, and it was being used by the company to pay salaries, to pay expenses, and being moved out of the firm. But every 6 months, the firm had to deliver an audit of the fund, and in order to hide the fact that money was missing from that fund, they would do things like borrow $150 million from a Middle Eastern airline and deposit that loaned money in the fund for a few days, so that on the June the 30th audit date, it looked like the fund was full, when in fact it was not, because a few days after the end of the audit, that loan money would be sent back to the airline. Hey, there was all these kinds of tricks going on.
Hey, Simon, just in the last 15 seconds that we have, what is the fate of Naqvi right now?
His extradition from London to New York to face trial in New York has been ordered by the UK court and UK politicians. He has asked to appeal that extradition. When I checked with the courts, we're still waiting to see whether or not he will be allowed to appeal the extradition.
Simon Clark, a journalist at the Wall Street Journal, also the co-author, along with Will Lauch, of The Key Man, the true story of how the global elite was duped by a capitalist fairy tale. Simon, thank you so much for joining us from London on Bloomberg Business Week Radio. Let's now check in with our colleague, Joe Matthew, the host of Sound On today at 5 p.m. Wall Street time. Joe, what you got coming up on today's show?
Well, it's kind of like where you want to start here. Yeah. Tim, we're dealing in a world of 3-4 breaking stories a day in Washington. We're going to start with infrastructure. The lawmakers are back. And then we'll turn to Afghanistan with a lot to talk about, Tim, on the timeline. And it's straight ahead on Sound On.
We look forward to it. Thank you so much, Joe Matthew. It's Sound On at 5 on Bloomberg Radio. This is Bloomberg Business Week, and this is Bloomberg Radio.
Okay, traders, I'm going to hold my position overnight. So if it will get filled overnight at the price 117.41.1, I will get filled overnight. Okay, so you guys, if you want to keep overnight, please do so. And as you can see, it's probably will close right now. And yeah, as you can see, position closed right now. That's it. This is what's happened when banks trying to reallocate its asset at 10 o'clock UK time. As you can see, position closed. We have nice profit for today, and I can show you from 117.33.1 until 117.41.1. Okay, it's nice, 800 pounds in profit. Well done, guys. All of you who followed my trades, well done. I'll see you all tomorrow. As always, we're day trading from 8 o'clock UK time until 10 o'clock, 10 p.m. UK time. We're based in the United Kingdom, but we trade all over the world. We have several offices. So if you want to join us, please do so. Please join us tomorrow from 8 o'clock. Stay safe.
And power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a judge throws out a critical California law backed by the biggest gig economy companies. Prop 22 allowed Uber, Lyft, Instacart, and DoorDash to classify their workers as contractors instead of employees with full-time benefits. Now it's been ruled unconstitutional. We'll break down what it all means. Plus, it's not just SpaceX. There's a whole host of companies vying for the space launch market. One of them is Firefly, with its first launch on deck in just 2 weeks. We'll ask the CEO what he has on Elon Musk. And Disney racks up $125 million in online revenue from Black Widow. Actress Scarlett Johansson has already sued the company, saying Disney cheated her out of a big payout by releasing the film online and in theaters. We'll find out how this helps or hurts her case. We'll get to that in a moment, but first, the markets started the week in the green. Optimism over vaccines, of course. Let's get the details with our own Ed Ludlow. Ed, take it away.
Yeah, stocks near record highs. The S&P 500 up by 0.9%. As I said, near record highs. Really, the gains were in technology stocks. You can see the NASDAQ 100, very tech-heavy index, at a fresh record high, up 1.5%, outperforming. Nice sea of green. We like to see that on a Monday. A lot of this around optimism about vaccines really driving a recovery for the US economy. Of course, it's a big week, though. Come with me into my Bloomberg terminal. Take a look at this chart. You can see the S&P 500 really been making gains as the Fed continues to add to its balance sheet with those asset purchases. Of course, we had the Jackson Hole Symposium this week. The feeling is that we'll get some kind of mood music at least about the outlook for tapering. But as I said, come back to me in the studio. The other big story of the week is this landmark US regulator full approval for the Pfizer-BioNTech vaccine. You had President Biden speaking on Monday saying that this may spur mandates from employers to get their employees vaccinated. You can see the gains in Pfizer up 2.5%. BioNTech's American depository receipts up almost 10% with those outside gains. The other big story you're following, of course, is the decision by California court to throw out that ballot decision that people voted to treat gig economy workers as contractors. Interesting, what we saw was initially Monday a drop in those stocks. Uber, Lyft, DoorDash were all down. Well, by close of play on Monday, you can see Uber up more than 2.5%, Lyft up almost 3%. It was really just DoorDash that struggled to negate those losses, still down 0.5%. Wall Street essentially saying that they expected some short-term losses, some volatility, some pressure, but really this isn't going to move the needle much. Emily.
Interesting, Ed. Well, we're going to talk about that much more. Ed Ludlow, thanks so much. Stick with us. The hotly debated California law that voters passed overwhelmingly last November has been ruled unconstitutional. Gig economy companies, again, Uber, Lyft, DoorDash, Instacart, paid heavily to market this law, Prop 22, to voters. It allows the companies to classify drivers as contractors rather than full-time employees with full-time benefits that come with that. Now a state judge has said this law is unenforceable. What does it mean for their drivers and for their business models? Bloomberg's Josh Idelson and Mandeep Singh of Bloomberg Intelligence join us now for more. So, Josh, this came out late on a Friday, as I understand, was pretty unexpected. How much of a surprise was this?
This was a big Friday night surprise for a lot of people who had seen this lawsuit as a long shot, this challenge by some rideshare drivers and union organizers to overturn the law. But the state judge sided with these challengers, saying that the proposition is unconstitutional, in particular, crucially, because it contradicts the authority that the state legislature has under the Constitution to govern the state's workers' compensation system. Prop 22 deemed these workers to be contractors and not employees, and thus excluded them from a suite of state workplace protections, including workers' comp. This judge said the ballot measure, which was not a constitutional amendment, went too far in disrupting the rights that the Constitution specifies the legislature has to govern the workers' compensation system.
The law, this particular case was pushed by drivers themselves and also an organization called the SEIU, California State Council. Spokesperson for that organization said for 2 years, drivers have been saying that democracy cannot be bought, and today's decision shows they were right. Uber responded, spokesperson Noah Edwardson, saying this ruling ignores the will of the overwhelming majority of California voters and defies both logic and the law. We will appeal, and we expect to win. Now, Uber CEO Dara Khosrowshahi